Good morning, traders. This is Rose. Today is June 4th, Tuesday, 1 minute after 9 a.m. Eastern Time. Just checking audio, video. I was just waiting for more people to join. Today is the last day of the Orlando event, and then it'll end today. Good morning. Good morning. All right, let's just begin. I'm going to start with the daily chart, but first let's take a look at weekly. Weekly is an inside bar at the moment. First week of June, and we have a cup and handle with a dip down here, and they found buyers right away. Market wants to make new highs, but I want to see how this week progresses first. But you can see what's been happening since Friday. So we're just doing sharp reversals and squeezing out the bears. So market is buying the pullbacks, but monthly is obviously a tiny little bar. Last month was a bull close, although it's got an upper wick, but it's still closed on its high. So it's a buy signal bar for June, and the market is still trying to perhaps make new highs. I've got a trend line here. If we break this trend line, there's another one. That area will hold. So even if we do come down, this area could hold. But if it doesn't, we become bearish for somehow. Remember, this is monthly. We need bears to break this trend line. We could end up coming down, testing this breakout test area of the June 27th, and then testing of the moving average possible. Is if market continues to come down, then is this area I'm going to look to buy. But at the moment, we are is tiny little bar, and is market is trying to. It opened above the close of May, so it might be trying to go higher, at least test the prior month's high. It is possible that we could do that. So that is 53.60. 65.50. We could get up there about less than 70 points. Let's see if on the weekly we have a double top. We also have a 1, 2, 3, but this is very lopsided, so it doesn't count. I like to see another push, and then trap the bulls, then come down. We could be in a sideways trading range. So this is a broad trading range. Possibly we could come down, bounce, maybe come down again. Buyers would be there, right? So bulls will swing and the bears will scalp. So we only have bears to scalp here, not swing. That could put us into a trading range sideways and up price action. On the daily yesterday, we said that even if bears sell, there will be buyers down below. I don't have much information, but you don't really need it. All you need is this. So I am still basing the trading range breakout of this bar, and I had targets Friday. We met those targets before bouncing. Now, bulls are not really out of the woods just yet, so they have to actually today get above this midpoint and then retest this area. If they do that, if today becomes bullish, for some reason, we need to look for signs at the open. I'm going to look for market to keep going higher, right? So I like to see, where are we now? So we are at 52.82. 52.82 is all the way down here, right? So pre-market, we actually did come down almost halfway. So market is trying to get back up. If we become bullish, that's great. So we're testing kind of the lows, but not the lows, but the midpoint. If that's good enough for bulls, they could buy and keep going higher and higher and higher. This is where we might stall, or we're going to keep going up and up and up and up. I don't know if we would get that today. That's a lot of points, to be honest. Is 82, 92, 02, 12, 22. So that's 40 points. 22 is right around here. But strong bull days, we could get another 40, right? So that could get us to the 62 area. You see how it adds up? 62 is right here. That's where the sellers are, probably in this area. And if today becomes a very bullish day, expect market to continue. So this would be a leg one, pull back leg two, could get us up here. We could stall at the highs. That put us into a big trading range. What about the bears? Well, we are still, like I said, the bulls are not out of the woods yet, so it's not all that bullish. But they keep squeezing the bears out. But bears, market is right here. So 82 is, we're below this level. So that's not good for the bulls, actually. If market decides to become bearish, then I'm going to look for bears to take out this lower wick and continue to come down. The problem here is that when we test here, okay, they can also bounce it right back up. So we could end up becoming a inside day as well, okay? If the bears, buyers are waiting here underneath yesterday, is we could test underneath yesterday and then is suddenly go right back up. I don't know how today would close, but we could come in. It's not all the way inside day, but just come in almost inside day and then go back and close inside this yesterday's range again. So we'll see how open is today, but bulls need to show me some strength at the open. Bears, if they want to sell, we might need to come down. Let's see. So this was a big squeeze. No one really expected. We expected maybe go back up to 50%, maybe 66, but that's about it. So a big squeeze end of the day, which repeated yesterday. So you can see that we keep squeezing. This is a bull flag, but look what happened. Yesterday we went up to the highs, and that's where we stopped. So pre-market we came down. We're right around here. You can see that the cup and handle form. We're going to open up here. So if we start to get bulls, they're going to try to break out and probably clone or project that to the upside. That could get us to 5260, 5262 area, or is May high. So these are all magnet. But what about bears? Can they actually reject? We could end up coming down and testing these lows, but you see this right here, this is reversal, right? So we have taken out that structure. That's very strong. There could be buyers here. So we could do this and go back up, even if it's a deep pullback, but that puts us in a much bigger trading range. So we could go up, everybody's long. We can then come back down. That would create another squeeze. I would look for a trap and then go. So could get these deep pullbacks, but only to be bullish. So you had this channel, broad channel down, and we tested the channel high, came back to the mid-channel line, and we found support. So now bulls need to show me this quick pullback, shallow pullback. They could actually break out and go back up and test these highs, May high and higher, but that creates a much bigger trading range. If the bulls fail and we start to sell, you're going to have a double top lower high, and the neckline is rather large. Bears need to break that neckline, pull back, and then they could sell into these lows. That's where buyers there again, and that puts us in a trading range that I would look for a 50% of the trading range. Test it again. They're bounced. That would give us some kind of a wedge bottom. So that's what I will be looking for as well. However, if the bears bring it down but never take this out, that could be a rejection. So failure over failure is a swing up. So I would look for a 1 hour, 2 hour targets, but I would first look for a good entry with strong bull bars. So when that happens, I take this range. I don't even need to look at 1 hour, 2 hour. I simply clone it up, so project it, because this, when the double top fails to sell, right, I take that as a failure and project it up. That's my target. That's what I do. I do it on a micro level and I do it on a macro level. So this would be the macro level, right? You have a reversal here, 1, 2, 3, nested wedges, and then its market broke out, but it's a trading range. Brings down, creates a big lopsided cup and handle, and we test this area and found buyers, but we have not yet broken out of this. So it is possible that we could actually pull back at the open. Then I'm going to look for is reversal back up. So only we start to take these out, then I'm going to look for a measured move to the downside, or at least these lows to be tested. This area could be, there's a trading range here, and we could dip a little bit and then go bounce, but that will put us into a trading range. The hourly chart, I used prior week's range, last week's high and last week's low and last week's midpoint. So we found buyers in this discount area. Lower area, or the lower third, is a buy zone. Whether you call it a discount area or buy zone, it is the same thing. Okay, so you can see that we had a dip there. Buyers came in pretty strong, and we go right back up to the upper third of this trading range. There's resistance here, rejection. We might go and get a second rejection. If it's strong, we could actually swing all the way down into this area, and I would look for a bounce there. But we're already there, by the way. It's already bouncing from there right now. So you can see market is trying to go and test this bull bars high. We could get there. Let's see. It's trying to go back up to this high. There's equal high here, or these Asia low. Asia breakout, tight tight trading range. They corrected this impulse bar is strong. That's a bad price action. When a bad price action is corrected, it's possible that they want to sell more. So then you take this structure and project it down. That's your measured move, or that's 1 hour, 2 hour, 3 hour, and 4 hour. And then there was a gap here. You see this gap right there holding. There's probably a wedge here, so there's a good reason to reverse back up. But you got a leg 1, pull back, leg 2, pull back. We're already in leg 3, and we're in a sell zone, right? Market was very bearish. If you're not gonna sell this until you see good sell signal bars. We can get 2, and then we could swing down, or we're gonna get a very weak one, and then we're just gonna reverse it back up. So that's I'm not ready to sell anything. I need to see the signal bars first. So as far as I'm concerned, bulls are trying to get back above this bull bars high, or there's equal highs. They might be trying to go there because they know above the equal highs you have stopped sitting. Okay. So we're stuck in yesterday's range. We might need to go test these highs. 1, 2, 3 wedge bottom. Market reversed on Friday, came back halfway down, reversing again. I'm afraid we could come back down. It's just, it is right now 52.85, 50. So we are just around here. It's already came down. So let's see if the bears can move this down a little bit, only to stop here and then reverse back up. Or we're just going to keep going up and up and up and up, but this area is resistance still. So 85, right here, that's where we are. Key area, so it's magnet. Asia low is magnets, but sometimes we get closer and are not able to reach. We pull back, use this area as support, and then we go at it. So I'm gonna wait to see what market will do at the open. If we become bullish at the open, that's great. I'll be looking for consecutive bull bars closing on their highs above their midpoints. Then I'll start buying. There is a trading range here. So we are slightly above it, or actually right here, right at the edge. So we're going to open up in this area. If this holds, that's a great way to buy and target the prior highs. If we move underneath, then that's bad. We move underneath, I'm going to look to sell into this area. And that is trading range lows. I'm going to look to buy from there. That's the plan on the 5-minute. Move underneath, then that's bad. We move underneath. I'm going to look to sell into this area. And that is trading range lows. I'm going to look to buy from there. That's the plan on the 5-minute. Yesterday we talked about, let me add a little bit more data here. Okay, there's a tight trading range here. Bears want to bring market down, and they assume that they have already trapped the bulls up there with that new high. That was a leg 1, got a leg 2 down, but you might get these leg 3 as well. And if selling begins strong, eventually it will. This is the area I'm looking for market to reach, but we have to get days actually closing below this 50. I believe that's 50 SMA or EMA. I have to check. It's probably SMA I'm using. You're supposed to use SMAs other than 20 EMA on the daily, weekly, and monthly charts. So once we start to get those bear bars closing, we're definitely going to come down and test this area. There are buyers, so you can see that they try to buy here is trap. If we get a surprise bear day, market will come down here, and until you see a strong bull bar, you're not going to buy. That's when bulls are going to try to scale in and get an 80% probability, possibly 60% later on. That puts us in a major trading range. So if we start to become very bearish, then I'm going to assume that bulls couldn't fix their trades or partially fixed, and a surprise bear bar. Now we're becoming a lot more bearish. I'm going to expect market to come down more. Then I'm going to look for strong bull closes, a good signal bars to buy, but the market can mark down the prices, contract prices, if it starts to sell very quickly. We'll see. This area, there was a gap here. This gap is closed by bulls, but in the meantime, other gaps are left open. So those gaps will be targets. The first bounces will probably take there if we do come down there and there. This one already tested. So we could come in here. It's a good place for a bounce that would give us a third leg down. So market is trying to reach somewhere, is pre-market a little bit high. They could be looking for a good price to sell. Nobody wants to sell low, everybody wants to sell high, so that's why we're going up. There's a leg 1, leg 2, leg 3 already formed. If we start to come down, we're going to test this bear bar. Okay, so this is resistance at the moment. Okay, and we could end up coming all the way down somewhere here. Okay, and then bounce, and then we could even come down. That will create a left shoulder, head, right shoulder. If we cannot break this resistance, then we could come back down. That could create that initial sell, and then we could just get that bear bar. It is possible, or is, since this is another, they're trying to squeeze again, all the bears, is this is a rounded bottom. Shallow pullbacks, if market is bullish, it could come in into this shallow, with shallow pullbacks into this bear bars and buy, and we could just keep going up, but that's resistance right there. Okay, so we'll see how markets plays out early on. At the moment, it's in a tight bull channel, but also in a trading range. So trading range highs, trends fail, we could come back down. I'm going to be targeting this bear bar. Area of interest, so that's 82, slightly above. In Ninja, it's basically I'm mimicking what's on this blog. It's right here, daily chart. This is the closest I can come to. So it's basically, it's like an RTH, but if you use the template, it just doesn't look like this, so this works. If you divide the 60, it kind of does the math for RTH daily. Look, just trying to make my chart look like Al's chart or Andrew's. Because I don't use TradeStation, I use Ninja as my platform to trade. It's different setups, different applications, different coding. All right, I'm just going to wait for market open. We have 10 o'clock news, 2 of them. Let's see. So we have the factory orders and jolts coming up at 10. Job loss data is tomorrow. We're going to have ADP's employment report. It's at 8:15, PMI 9:45, ISM 10 o'clock tomorrow, and then the oil reports. This is all leading into jobless claims. It's on Thursday. Productivity and cost. These are all inflation. Is GDP. So, and then the employment situation. So anything jobs related, factory orders, and all that leads to job openings or losses. So the employment situation on Friday, we'll take that data, and that's going to be non-farm Friday. Big news. So this week is economic data is strong. We could get a really nice bullish day today, but we'll see. That's kind of what I want. But if market wants to sell, it'll show you. We could make a double top higher high, and then trap the bulls and come down. But we're going to open up down here anyway. So if the bulls do show up, we could just go sideways a little bit, and then the buying can begin. I have magnets up above, and then I'm going to have some measured mu targets. But if we do go up and we trap and then we start to come down, I'm going to look for bars still moving underneath EMA and separating from EMA. I'm going to look for strong sell, and then I will sell a bear flag at the EMA once again when we get back to the EMA. But so far, the market is trying to get above this 15-minute bull bar. We could reach the Asia low and then get rejected there. It is possible we could make a double top there way before the Asia low. That would be 93 area. We'll see. So I think at the open we're going to try to reach 52.89, 52.90, and then there might be some sellers there. See how quickly it sells, or will it fail to sell? All right, here we go. Market is open. Remember, 10 o'clock 2 news coming up is rather strong. There we go. Market is reaching 52.89 to 90 area. We're trying to reach. We just bounced from the top of this area. If we close a bull bar, we'll go higher. If we start to get bear bars, we're going to break this. We can move underneath the 1 hour EMA. There's another small trading range here. We could test there and then reverse back up from there. I didn't mark it, but it's there. That's the heart. We could reach here and then reverse back up, or we're just going to go up. I have not entered into a trade. I don't like to do anything unless I'm trading ETH chart. Market went up and up and up for some time now on the ETH. It could be too high to buy here. We're in the resistance, and we just tested the 50% of this resistance. Bears trying to get the first sell signal, but we might need to come back and retest. I would look for a second sell. This could be blocked by bulls. There's a breakout test area. Even if we come down to the breakout test area, there will be buyers waiting. If you sell now, you could be limited to selling, and we might need to get back up again. Again, this area of interest, tight balance zones or trading ranges can be buy and sell zones. We're coming from above. It could act as a support, and you can see that we had an impulsive leg up, breakout leg. We're testing its starting point. There are buyers there. It's becoming very strong. You can see it's trying to reach this area now. I said I would be targeting these bear bars if it comes down, and that's the first bear bar we talked about. Could be buyers here, but it's surprisingly big bar at the moment. And it closed very bearish. Bears are trying to get a trend from open. They need one more bar. Then I would, if we break this area, fail to bounce, then I would expect this area. We could even go up and make a double top and then continue to come down. Or we're going to make a wedge bottom, right? So that could bring us down here. It's possible, but I don't know yet. Bears trying to follow through here. 1 hour EMA is the magnet, which we haven't tagged yet. Bears want to take out this neckline, but they see 1, 2, 3 wedge top, neckline. But it's not easy because market was bullish there. So any rejection of this bar puts us in a small trading range at the open. This is a strong outside bar followed by an inside bar. If bar 2 closes like this, there will be probably sellers above bar 1 or at the upper third of bar 1. Bears who sold the close of bar 1 stuck, so they will sell here and try to bring this bar to the midpoint of bar 1 to break even, but if they can't actually close it bearish, then we could continue to come down. Otherwise, they're just going to scalp out, and the bar 1 can become bullish, but bar 2 can become bullish. Bar 1 is too strong though, so probably sellers at the upper third and above. Bulls see a cup, large is cup and handle is with this pullback is, and they want to close bull bars and continue to buy. So that means I need to see a good bull close and then buy the close of bar 2 with bar 3 and 4. That could bring us the close of yesterday. But right now the bar 1 bears are stuck, so they're selling the upper third, and you can see that bar 2 body has come down to an area where they might be minimizing losses. So this needs to pan out before I even consider doing anything. Decent gap down open is market could continue to sell for a while. If bar 2 closes on its low, closes bearish last minute but I don't know. We'll see. There's still 1 minute and 2 seconds for this bar to close. We could get a micro wedge bottom before getting any buyers. Then I would look for a double top near the EMA, probably slightly higher than bar 1 and then I would like to sell that double top. But if the bulls close a strong bull bar, then I'm going to look for move up with 2 legs into the EMA, and I'm going to sell from the EMA and targeting bar 1 lows and slightly lower in this area. So what I want is now bulls to close this bar bullish, buy with 2 legs, and then sell, test this area, and then I'm going to look for another bullish move up. So what does that mean? Well, that means you got a failure to break above EMA and a failure to break below bar 1 starts a swing trade. So then I'm going to look to buy the pullbacks to EMA, and I'm going to try to go long, but there could be a wedge top somewhere around close of yesterday. I'm going to look for another pullback that creates, it could have a wedge bottom that could create a bull flag, and I'm going to buy once again. So I got a couple of scenarios in mind, but I need to see bar 3 now close bullish if bulls want to do that and get us to the EMA. Failure to get a bull bar here, bears can sell because they see a bear flag now. Think of this gap as a one big bear spike. Okay? They see a bear flag, so that means they're going to have to close a bear bar. That would create a triangle, bear flag, and sell. But we don't know. This bar is young. It could be testing the bar 2's midpoint only to go back up and close bullish. If this bar closes bullish, there will be buyers 1 tick above bar 2, and then they will buy. And they're going to try to get to the EMA with 2 legs, at least. Inside bar 2, pretty strong. All we need is another bull bar closing, taking out the inside bar's high, and the stop below bar 2 or bar 1. Market will look for a 1R, 2R targets. Okay, so we get that second bar close bullish, we could definitely go up. When I say second bull bar otherwise it's the third bar I'm talking about. Bulls need to close this bar bullish if they want to go higher towards the EMA with 2 legs. Sellers above bar 1, but could be a lot higher. another inside bar. So you have an II is, so now we need that bull close. If bulls want to go test the bar 1 high and go higher. What do you mean unnumbered bars? I have from yesterday. Also EMA is affected by it. I'm not sure. Oh, you mean these? I'm probably on, oh, I see. I'm on the RTH 90 something bars. That's what it is. It's showing you all the bars till 5 p.m. before the maintenance hours. That should get rid of it. So here we go. Okay, so bulls are closing, trying to close the bull bar, trying to breach from the bar 1 high. You know what that means, right? So would have been better if 3 was to close bullish, but doesn't matter. This is still a good setup for bulls. It's just trying to go higher, but I'm still aware of a possible double top and a failure, and market to come down from there by keeping, by making a double top at the EMA. That could become that bear flag I talked about. But that would have been better if we were below the EMA with a gap to the EMA. Then I would have sold with several legs down, but that could still become the double top. And then if we close a bear bar here, market will come down and try to test the 3 low, 2 low, and even 1 low, right? But closing a bull bar, then we're going to get a breakout. We could go even higher. But I did buy scalped at the high of bar 1, just in case we make a double top here. But I think there's a little bit more room to upside. And the 10 minutes left for news, so I'd be careful. We do not have a breakout bar from the bar 1 high, so we are still stuck within the bar 1's range. Could be a 3 bar failure, 3 upside bars failure within the range of bar 1. If the bears start to close a bear bar, we could end up coming down depending on how strong the bear bar is. Otherwise, bulls can still get this breakout. Bears want a double top and they want a lower high with bar 5 that means they need to close the possible lower high by bar on its low, taking out the 4 low. That would be even better setup for bears. There might be some buyers underneath bar 4 because it's slightly a breakout bar from above 3, so probably some buyers there. Disappointed that they couldn't get that breakout. They might buy there and try to break even. But lack of any bear bar, bulls will try to push this higher. They're trying to tag 89.50, 90.50 would be a 10 point for bulls. I think the market is waiting for the news. We have now small trading range with bullish pressure. Bulls want to get back up to the close of yesterday and make new highs because they see a cup and handle. News will determine which way we go. Otherwise, I'm just gonna wait for it. Not gonna chance anything here. But it is a small trading range, so there are sellers up there. Excuse me. Bears want to close below the midpoint of bar 1, become bearish, come back down and test the low of 3. That's a buy zone there. Lower third of bar 1 is the buy zone. Also, buyers were there, so probably we're going to hit some buy orders if we come down. But 3 bars up, bears still trying to close a bear bar here. to reject this initial breakout. Yeah, I mean, it's a doji. It's a decent close below. It's slightly close below its midpoint, but it's not the best sell signal bar. So anyone's looking to sell already put their sell stop order underneath 5 and waiting for another bear bar to form and activate their sell orders 1 tick below bar 5. But if we take out the 5 high, bulls then are going to get their 10-point swing, which is starting at 89.50. First scalp could go up to 90.50. So this is why I don't like trading right here. It's the top of a small trading range. We got a bar 5 problem. Bears want to sell underneath and get another bear bar. That could bring market all the way down to the 3 low. So even 1 low, and I'm not going to do anything here. Would I sell here? If I sell, I would have already been activated my short order, 1 tick underneath 5. I would look for a 1-point scalp because you're in a trading range, and I would leave a runner into the lower third of bar 1. Probably would scalp there as well because it's going to try to bounce there. So you see what happened there? Bears got it. But that doesn't mean that they're going to be able to sell. However, if they get a strong close here, they're definitely going to come down and test the bar 1 low. That means bulls fail to break out from this. That means they're moving underneath this area of interest. That becomes a resistance. That means they're going to come down and test here. So less than 3 minutes left for news. Just be careful. It's too big news. I would wait about 10 minutes or 15 minutes before doing anything with the news. Just be sensible. So you have a failure of a breakout. Are we going to get another failure? I think we're going to move underneath bar 1. And we might get actually a strong leg down and another leg down before we bounce back up. Bears see a small left shoulder, head, and right shoulder, therefore neckline or neckline. So they want to break this neckline, come back and retest it, and then come into this one. As market breaks the necklines, it can extend down with measured move targets. So head and shoulder patterns create bear flags, another bear flag, possibly another bear flag before making a wedge bottom and reversing back up. Unless the bear flag fails, then we get a reversal back up. That's a failure. So what is a failure of a failure? Is a swing without breaking this neckline. I'm not interested in selling. What happened there? I said we're going to come down and test the bar 3 low. So why is that happening? What did we test there? What did we test there? What kind of zone did we just test there that the bar 6 is bouncing? Kevin is like, I'm going to take a shot at this one. Type in, well, let's see. Bottom third of the range. That's a very good one, but it's a very obvious one. But that's not what I'm asking. But it's a good start. Trap zone, yes. But it really is the limit buy zone, okay? Not the trap zone, but it is part of the trap zone. So remember I said when we get down here, there were buyers there. We're going to buy. But if you are not good at limit order zones, finding them, right? So what is this? This is an outside inside. I gave you the clue. All you have to do, measure bar 1 range, edge to edge, and apply your, what do I call that? Mother bar. And then what? You're looking for, look at that buy, right in that red zone. That's a limit buy. Holy cow. Woo. All right. Well, that was right there. But limit buyers jumped right in. Stop buyers jump right in. Failure of a failure is swing. So you're getting that now. So that's your first shallow target. If we close a bull bar above this, that's the second target. We could still get to the measured move target, which is right here, 98.50. So then we could continue to close of yesterday, which is magnet. But if we fail to close above right there and close somewhere down here, we're going to reverse right back down. Because anybody sold underneath 5 is stuck. They're going to sell higher. They're going to try to get back to the bar 5 high or the close if they can make it. But so far it's foolish. I think the market is trying to get back up to here and the close of yesterday. If we take out the close of yesterday, then this is your next target, and so and so, and high of yesterday, or the opening week of opening of the week. It's the same price, would be magnet. Okay. So we found support. Remember, if it's a support, we're going to test it twice before breaking out. But the target is going to be prior highs, that high, and that high. Okay, that's where market is trying to go. So if the bulls can swing here, which is a swing, right? And all we need is a second bull bar, right? So after this, you can also say, hey, this was the failure. And then another failure came back down 50%. That's swing, right? So you could have measured from here, stop underneath first bar. That's your 2R. A lot of scalping will take place at 2R. Some will say, no, this is a failure and this is a failure. Therefore, I'm going to measure, say this bar closed there, and I'm going to put my stop underneath bar 6. Then this is my 1R. And I'm going to swing into 2R. But first, we need to get that one. I don't know where this bar is going to close, so I'm just approximately, prematurely measuring that. But if we do close like this, buy stop orders will be 1 tick above, bar 7, and then even if we pull back, they could buy again. If it does come down, that means you don't enter above it, so you're safe. You can always cancel it out. But right now, from measuring from these 2 bars, right, you got a micro double bottom, is you got a double top. Failure of failure finally sets up, right? So you're basing your swing with these first 2 bars. One of them is an inside bar, so it's the entry and the stop. 1R, 2R. It's just conservative. So we should be able to get there. Stop. 1R, 2R. It's just conservative. So we should be able to get there. But it's news. So let's see, bulls can push this higher. Big upper wick, it's coming down. Bulls couldn't close above 1R. Expand it as much as possible. Could still go up. It's because many sold underneath 5 stock, so they know that the bulls will take profit here. So they're trying to sell maybe close to the 79 low, 1.5 R. They see that it's not able to get to the 2R very quickly, given it's just such a small space, is distance. So they're selling. I said we're probably going to either come to the 5 high or the close. We even moved underneath. So this is why people say, oh, well, Rose, you scalp a lot. You talk swing, but you scalp a lot. Well, you're at the open. You have news here. News can change anything, any given second. Is at the open, you get wild reversals, right? So you do have to take profit. So I expend my profit taken 1R, 1.5. Hey, that's great. Your runner is running from 2R and furthermore up. But it's not given that you're going to get that 2R. You may not. Market needs to go back and forth, back and forth. Your stop is down here. You get another bear bar, you're going to be forced to exit because we can come down and take out the one. Are you going to wait for a market to come and get your stop? No, you're not. Especially taking out a bar's low like that. Not a good sell signal bar, but still, look at the ATR is 8.25. It's moving so fast, it could double that amount, go in one direction or the other. It's telling you one time the ATR is what you're going to get average distance for price to travel. It could be 1.5 or 2 times the ATR if I want to take the price in that direction. So that's news for you. So you either scalp at these levels, expand, don't expect follow through, or just step aside and wait for another trade to set up. I take profit no matter what. Bulls did not get to the 20 point. It was a maximum 15 point, but they couldn't get to the 20 point. So now the bears moved the market more than 10 point. So as far as I'm concerned, they can move market down. But there's a neckline here. We do have, what do we have here? Could be a spike. The channel looks bullish, but ends up becoming a bear flag. 1, 2, 3. Double top, lower high. If we break these trend lines, this could be a possible flag, and we could come into this area. So the bears need to close a bear bar, and they need to take out the bar 1 low. They know that there are a ton of stops underneath bar 1 or underneath the inside bar 2. So bad sell signal bar, we're probably going to get back up to the 7 eventually for being a bad signal bar, because that means bulls are trapped up there. They're looking for a support to buy again. So it's a difficult in the morning. That's why in the daily blog, Brad Wolf advises traders to wait for sometimes 6 bars, but with the close of the 6th bar, you got news, and today is the news. So sometimes it's better to wait for the first hour and don't trade 12 bars and then take a trade. I mean, I take frequent, I do swing as well, but I take profits as I'm swinging. I'm never a all in, all out kind of trader. I don't believe in that. You can be all in, all out if you can definitely move your stop. I'm a risk on, risk off trader, and I'm going to try to stay in the market as long as I can, obviously, but given I don't have a large account, so I do have to manage the trade and not let it go against me. But in situations like this, everybody knows that the market will reverse in the morning quickly. So you have to pay yourself, right? Where is the follow? This is a breakout, but where's the follow through bull bar? There is none. So now what do you think is happening? They're trying to break this and come down to bar 1 low. So it's support here, but it's probably trying to come down to this trend line. So this is now bar 9. 10 is minutes after news. Market is trying to reach bar 1 low. We need one more bear bar closing below 79.75. Otherwise, it's going to be difficult to sell because it is support. Now, what's happening here? What did I say about bar 7? Market is looking for a support because bad sell signal bar. Bulls are trapped, so they're going to buy at the support to break even. So they're trying to say you bought above this and then you buy at this support. Yeah, that's great. You just had a break even. You got a minimal, loss there, but goal is to get the price up there and then somewhere up here. Somebody might have both the close of that bar, then you measure again, right? So where's your break even? You just reached it. So many bulls might exit out here saying that, okay, this is good. This could get a follow through selling. We got to take what we can. This is the safety. If this bar suddenly closes bearish, then you know those bulls exited out there. Market may not go back up. Therefore, we could come back down. So this is basically a double bottom in a way, or wedge bottom. Neckline broken, it's the breakout point. Are you asking about the 5264 price line? Yeah, so basically I'm finding a gap and then also a breakout test area if market comes down. First buyers, that's the first defense. We're probably going to bounce here, but we could continue to come down. I'm just giving myself is like a roadmap, like milestones, where if we become very bearish, that's where we could reach. So I'm finding if there is, this is a double bottom. This is a double bottom. If we have, right, these levels are important. First defense by buyers could be resistance. If we cannot get above it, then that will be target. Then you have a measured move. So those levels are important. The places where market either broke out strongly, so when we get back, we retest, we'll find buyers, or goes up to that, ends up becoming a resistance, comes back down, we test again, because probably a lot of people bought there and got stuck. They move the market back to it, they exit out, nobody to buy, it becomes a resistance and sell. Stuck, they move the market back to it, they exit out, nobody to buy, it becomes a resistance and sell. Bears trying to break the neckline. Look how many times after we tested 3 times. So they're trying to come down to here. I don't know if no successful break of the neckline. It's no break of bar 1 low, so we don't have a bear breakout, but we have a trading range here. Trap traders, bears trying to, if they were to sold, and they did, the close of 1 at the open, they sold higher, brought it back down. Look at bar 9 low. It actually moved below, okay, the close of 1. So those stock traders selling higher exited out. Now, can the bulls show up here? Well, if we trap the bears here, why do the bulls are buying here? Because they're stuck up with the close of 7. And also above bar 6, they bought earlier, high 1, high 2. So they're making money. Where are they trying to bring market up? To the close of 7. So let's see if they can actually bring it up there. If they fail, they could exit out. But if they do close strong bull bar around here, they could even go higher. But that puts us in a trading range. It's still a small head and shoulders pattern. This time, I think I'm not going to change this. I'm going to leave it as is. How does a head and shoulders become invalidated? When the bulls actually close above the left shoulder, which is 4 high. You need a bull bar closing above 4 high. Then you can buy and target these prior highs as they were targeting earlier, and the news rejected. So after 10 to 15 minutes after bar 9, market tries to pick a direction or try to fix the bad price action. If they decide the news brought in the bad price action, they can definitely reverse it back up. Now you had a failure of a failure. Bulls got something out of that, but they failed. Now bears see a failure, breakout failure, and a breakout failure. Okay. So they probably put a sell order underneath 9, they haven't entered anything. They want market to come down and activate their sell order, and then their stop is going to be either above 7 or above 8. But it still hasn't really decided. Anybody bought and look for a swing, got a 1.5, but couldn't get to the 2R. Disappointed. They don't want their stop to be hit if it's under bar 1, right? And or 1 point under. They're buying at the lows. They're trying to prevent bears from breaking below and run their stop. So you're getting this bar. So as far as I'm concerned, bulls still have a chance here. They just need to start closing bull bars and reach one tick above the close of 7. They get the close of 7, they're going to keep pushing higher because they left a 2R earlier, which was from the measurement of this. So I'll use the bar 1 low is as stop. They left this behind. So it's a lot of fixing happening here. So how do I know the bulls are going to get back up here? First, I want to see 7 close breached, which we haven't. And I want to see bull bars back to back and a close above 1R with a bull close. We're not only going to get to the 2R, we could even get higher prices. But failure to do all of that, bears are waiting underneath 9. They might have moved their stop underneath 10, but I don't do that. Stop orders underneath 10 to enter with a backdoor. I don't do that because bar 10 is extremely strongly bullish. As far as I'm concerned, that will be a wasted time. You're going to end up canceling your sell order anyway. So bulls, second time trap the bears. Now they need to get a follow-through closes, bull closes. They just tested the 7 close, but no bull bar. But you can see how they break even right there. Okay, so now either close a bull bar or exit out of the market, let the bears take over. So this goes on and on and on every single time, okay? You see it here, you see it here, you see it here, until we get a swing breakout decision. If you can train your eye, seeing what's happening is who's stuck. In between the stock traders, you have a scalp opportunity, not a swing opportunity. Once the either side is fixing, then the swing probability increases. So what happened there is, well, this bar hasn't really closed. There's still 3 minutes. As far as I'm concerned, bulls can still close a bull bar at the end of the 3rd minute. But if they actually start to close bear bars, there are bears waiting underneath 9 to swing further down. What else is also happening or not happening? We don't see a bull close above the left shoulder. So this could end up becoming a bull trap. Okay, if anybody already bought above immaturely, above 10, so they're trapped. So the bears now need to show me that they want to close a bear bar. If you just step back and take your time and read the price action bar by bar, you're never going to get trapped. Even if you get trapped, you can easily fix it and exit out. You can make much more sound decisions when this goes back and forth, back and forth. There's a story in this chop that people call, but it really is a limit order market. Market is betting against breakouts, but eventually it's going to get that breakout. Both sides need to try twice to get that breakout. If they fail, the other side takes over. So here's a first try, here's a second try happening right now for bears. Here's a first try, here's a second try for bulls, and the bulls failed to close a bull bar above the close of 7 and the 4 high, which was left shoulder. So the bears now took over and they said, step aside, you have tried twice and did not do anything. So now this is our chance to sell for the second time. If they fail, then bulls will take over again. Something needs to try twice to give up. Sometimes 3 times. That's when you get the wedges, right? Wedge tops and bottoms. Tops and bottoms. I'm looking for a neckline. This was support, breakout, retest, support. So it's a structural, it's like a foundation, okay? If the foundation breaks, that means the structure is no more. We can come down. Lots of trap going on here. Look what happened is we actually tested the Asia low. There were sell orders waiting because they sold very strongly. So they're trying to swing it down, but they need one more bear bar on the Globex range. If the bears do close in 5 minutes hourly bar bear enough, they could continue to sell into the neckline. But it doesn't look all that great bearish bar on the hourly, and we're above the EMA, so that decision has not been made. It's a bunch of traps, yeah. Backdoor, it's just I guess I'm trying to explain is when something tries twice and not able to get continuation, bears know that. That's the second leg, right? Bears are looking to enter with the second leg as quick as possible, right? First entry, they're trying to enter, scalp, and then maybe enter again. So for bulls, right, here's the second leg. They're trying to enter with the second leg reversal, scalp a little bit, and then look for the lows to be tested, then enter again. That ends up becoming a swing up, right? So they're looking to enter the market as early as possible to grab a swing. Those are machines. Retail traders, they wait for higher low, double bottom to enter for a swing. They don't enter here. We don't enter here because why? We're just confirmation crazed. We need the confirmation. So bulls trying again. That trend line is holding right there, from there. We don't need it anymore. If we take out the bar 8 high, is anybody sold here early on instead of with a stop order waiting patiently, they're going to be run over. And that's what the bulls are trying to do because they're still trying to get back up here. So you have a kind of an expanding triangle going on here. We're above the apex. As long as we stay above the apex, this is going to be target. But what is an expanding triangle? It's a trading range. So it's big bull bar. It's bears tried twice, failed. So now bulls trying to get back up there. But you have a trading range here. What happens in a trading range? It's a limit order market. Any strong bull bars, market will try to bet against it. But we are above the apex, so we're still bullish. It's a good bar. The trend line, they're trying to get to the trend line and possibly above, but they have to push through here. If we get above 52.95, we're going to try to go here. That seems to be where market is trying to go. But I'm still interested in see if there are any sellers at the 52.95. If we clear 52.95, we're going to go test a high of 7, and the target is still 2R. Bulls managed to reverse it back up, so that's still a swing target with the stop under 1. What about not able to get above the trend line? Well, is bulls made money, right? So bears had a break even, made maybe like a tick or two, okay? that covered their commission selling higher even. So that's a break even. So now bulls took over, but they're making money. They got above bar 6. They got above the close of 7. They're doing a lot better. So they're making money. To me, bulls are a lot more stronger, and they have the upper hand here. So if we can't close above this, that's bad, obviously. But I would expect bulls to close above and continue to go higher. We'll probably they're trying to probably get above, make a new high. And even take out the high of yesterday. So today can become bullish. This could be right here is a failed, okay, low 2 and a high 2, buy and swing. So we could end up becoming bullish next couple of hours, but we need to clear this trend line first. So I did buy, scalped a little bit there because I'm always looking for failures. Failing to get above this, that could bring price back down once again. But anyone who sold again 11 close because they thought that, okay, selling a close of a bar in the middle of a trading range is not a good idea. Okay, you either sell at the high of a trading range or buy at the low of a trading range. You don't sell with market orders. Basically, selling a close of something or buying a close of something in a trading range is basically you're entering with a market order. You're assuming it's like, there is strength there. It's not. Just like here, they got stuck. So they're forced to sell higher, right, at the high of a trading range to break even. But knowing this is a trading range and we're at the highs, I took profit at the trend line. That was quick scalp because market can still bet against the bull breakouts or bull bars, even a couple of points above them at some logical place such as a trend line, because there are stuck traders still down here. So that's bad that 13 didn't close bullish, so that weakens the bull case is right here, even though the bulls have the upper hand, but it definitely weakens. So when do I expect to buy again? Well, this time bulls need to convince me. That means they have to close above this trend line for me to keep buying and build a position. Otherwise, I'm not interested anymore. I'm flat at the moment. There are sellers looking for a second entry short from the high. First entry under 7, not a good sell signal bar, so we're going to go and test it, which we did. Now a second entry, possibly bar 13. So there are stop order traders underneath 13, but the problem again, you're in a trading range and you're trying to sell with a stop order. Now this is a slightly better entry because you're at the top of the trading range, so it is logical to put a sell stop underneath 13. But I'm not going to sell. Bears need to show me that they want to sell. But if you do sell underneath 13, you have to grab half the ATR. So that's 725, like 3 points and a quarter you might be able to get here as a scalp, half the ATR. Or you can simply go for a 1 point and a quarter, 5 ticks. You could go for a 9 ticks. So that's 3.5. That's half the ATR. Or 225, the actual regular scalp, right? So you don't go for a 5 tick. 5 tick is given. Right? So that's more than 5 ticks, right? So you should be able to get at least 225. You should be able to get 9 tick. Since ATR is 725, 3.5 is also doable. So that's what the market is trying to probably get here. Remember, you're in a trading range, so that's a scalp. You take profit and then you leave a runner, then you go for a full ATR. That's your swing. By the time that happens, you're in a runner that could reach the bottom of the trading range. But are you going to get this? That's the question. They should be able to. I mean, that's just easy, right? So there you go. So take that money. They're giving you a bag of money. Just take it. And then leave a runner and look for a 790. So that's 775. So now you're leaving a little bit in the market you're saying I'm invested in this sell order. I took some money off the table because I'm in a trading range. It's a scalping environment. Because if this fails, then I can exit out quickly with a failed bear bar and still not lose anything. Otherwise, you now invested in the market as bear and you're looking for a full ATR value. Does it make sense, guys? I mean, if you can read this correctly, it can become very fun to trade, but in the certain conditions, you have to take profit. Well, the DLJ, that is in the course, but I can quickly go over it. Limit orders are basically when market is betting against each side. So something looks bullish, probably going to fail and trap you. So that because the bear machines are looking to sell something very strongly bullish. Hence, bar 7 is maybe even they try to sell the close of bar 2 because it came down, but they close the bull bar. So it's going to go up with a second leg, but at the top, probably they're going to bet against again, right? So bear machines bet against the bulls with the close of bar 2, disappointed that they could only scalp. They couldn't bring market down here. Now they get a couple of bull bars. They sell at the highs again, break even. They can't get another bear bar. They exit out. The bulls take over. You get the second leg up. But it's a sideways and up trading range. If a bar like this is getting another bet against by the bear machines, that means you're in a trading range. That means you're in a limit order market. So when you see a bear bar closing on its low, right, even if it gets a second bar, you might want to bet against either at the close, you buy the close, or a couple of points underneath, or at the low, you are going to make money by going long. Okay, so it's, again, conditions continue. Strong close, bar 10, bear machines are betting against, making money. Another one, bar 11 close bearish, bulls buying, betting against, making money. So until this happens a couple of times, you do not get a swing. So what happened there? Look, if you didn't take that money off the table, now what? You are forced to exit one tick above or the close of this bar 14, because that's it, right? So it didn't get the bear bar. You cannot linger. If you linger in your runner, you're stuck. You are now forced to sell at the upper third or somewhere here and hoping that it's going to come down, give you an exit so you can exit out. I see something like this. I just sacrificed that runner very quickly because that was a scalp and I was stubborn to stay in a position that wasn't going to go down. That's why scalping half the ATR is the thing in trading ranges. If you don't want to use ATR, then you're going to have to measure the bar and get some kind of an average size, understand of what is average size of these bars that you can scalp. But ATR makes it very easy. I don't have to do anything. So market is still trying to push. So you got a high 1, high 2, high 3, high 4. So it's still trying to get to the 2-hour. Bulls are still in a swing with their stop intact underneath bar 1, maybe a 1 point, 2 point, but it's there. So they're still trying to push, but how many times they have tried? So this is it. Bulls need to close above this trend line, and that should give us a continuation run up. So key price level is target, Asia midpoint, which I mark with yellow price label. Green is midnight open for US. That is generally the magnet is, and look what happened. We tried to sell, failed, we got above it. Now, the next pullback, if we do, that could be also support right there. But I'm going to get rid of this now because it's no longer valid. So this time I want to see bulls actually finally close. It's a buy above 14, only one bear bar, so the bulls are trying to get above 13 high. They're trying to test the 95, and they're trying to go higher. But it really is a bad open. I mean, this is just nightmare, isn't it? But this worked. If you were I don't know if you paid any attention how I trade these. We never broke the lows. So basically, this is pullback second time. Limit buyers are entering at the 50% of this balance zones. So they're using it as support, right? So they want higher prices. They probably want to get above the close of yesterday, make a new high, and then go higher. But it really is bad price action. Terrible trend. So you're basically stuck with scalping. But every time bears trying to sell, they're failing. Every time they're showing you, look, we're trying to sell, all we're getting is a scalp. All we're getting is a scalp. So maybe take the hint and don't sell anymore. Stop orders, trend bars. So if something is buy to close, just put a buy order, wait to get filled. Limit orders are waiting for market to pull back, buying at the 50% or buying at the lower third of a bar, but sometimes it only comes down if market is very bullish and strength, right? There's strength in the market by bulls. It may not even pull back to the 50% of this bar. It could just shallow pullback and leave your limit orders behind. That's why you buy above bars to pulled into the trade. You get activated into the trade as it goes up. You're just trying to drift. It's like you're in a, how do I say this? You're in a strong river and you're trying to go with the current, okay, faster, right? So instead of running on the ground, you just jump into the water and the water is going in the direction. It's just going to move you faster, right? So that's, it happens with strong closes. Do you see those buy the close bars or sell the close bars? No. You're getting bunch of bars overlapping, coming down, overlapping. This is a limit order market. This is a stop order market. So you either buy the close or buy one tick above. This, you can buy the pullback, okay, or sell the pullback. Sell the pullback, sell higher, make money. Buy lower, make money, but only a scalp because you are going against breakouts. So anybody entered with a stop order is second entry long, right? Above 14. What did they do? They took a profit. They scalped, okay, at the prior high or closer to the prior high, or a certain amount of scalp targets, maybe it's half the ATR, or just average 2 points, right? So they got 225, but half the ATR is what? 625, 325. So here's 325. Okay. And did they get a 6? Nope, that's it. So they scalped that, but it's not getting follow through. But doesn't mean it's failing either. So what is a scalp? How do you, if you're scalping, what is your risk ratio? So Matthew, you're asking me this question. So if you're in a limit order market, you're scalping. If you're scalping, is your reward higher than your risk stop or smaller? Is your risk higher than your reward or smaller than your reward? So I'm asking Matthew. So risk is higher. So excellent. So then you can decide what you want, right? If you're going for a 2-point scalp, you can have a 4-point stop, right? You don't want it like 3 times, 4 times bigger, right? So I generally use 2 times root. That's what I use. I don't want to lose more. 3 is, I think it's ridiculous. 4 is ridiculous. It's just, you don't need, you're trying to make like what, 2 points and risking 8 points? Come on. You don't need to take that trade. I'm sure you can just sit aside and wait for a better setup. But, or you can use that higher low, right? And you take profit, you're done, you're safe. Otherwise, use a money stop. What if you're taking that 2-point scalp? Can you handle 6-point, 5-point, 4-point stop? Does your account allow you? Some accounts don't. So that maybe you do the math and you realize there's no advantage here for me to enter a trade, and in fact I'm actually risking a lot on my account. Your number one job is to safeguard your funds. If you cannot afford it, you do not go buy that BMW. Okay, just stick to Honda. So buy what you can afford and preserve some for the rainy days. So, by the way, I drive a Honda, and my Honda is 16 years old. That thing is old, still going. I take care of it. I'm going to drive that car to the ground, and if that car breaks down, I'm walking home. So that's the day I'll decide to buy a new car. Otherwise, I'm not buying a new car. So I love Honda. It's my third Honda. I have not driven anything else. I'm not doing an advertising for Honda here, any promotion or anything. But I just want you guys to think that I'm bad-mouthing Honda here with the analogy. No Lambo, no. I do dream a Porsche. I like to buy my Porsche, but that's going to be a gift to myself someday. Someday. I don't know. Either that or I'm going to buy a boat. I can't decide which way to go. We'll see. Yeah. So it's a really bad opening, but you can see if you take this expanding triangle, it definitely is a trading range. We're above the 50% of this trading range, and the market is slightly more bullish than bearish. Bears were able to close 2 bear bars underneath the EMA with bar 8 and 9, but bulls deny them to swing further down. So that tells you right there who's in charge of the market. Even if it's weak, but they are in charge of the market, that's bulls. So this can change if the bears start to close below the apex of the triangle. That means they can bring market back down here. So then I would target this trend line right here for bears. But first they need to break the apex of the triangle, which is the top of this. I'm no longer interested in that. I'm going to get rid of it because we've been back and forth, back and forth. So trading range, open of the day becomes magnets. As you can see, we're oscillating around it. Eventually we will get some kind of a swing soon. So we'll see. I know I'm missing out a lot there. Dean, that's a good point. When I'm daydreaming, I look at Porsche and I look at Bavaria C50 boat a lot. And I research it on Instagram and look at other people's lives, their boat lives, and that's the boat I want. But that's a daydream. We'll see. Someday. That's what the trading is, right? You work hard, you save your money, eventually you retire early, so you get to play. So hopefully I can retire early. That's the goal. Yeah, German made. I learned early on that the German engineering and German made anything's very solid. So spoke to a couple of people who own Bavarian yachts, and they say that they really love it. It's a good combination of good quality and comfort. Yeah, Arturo. Okay, that's good to know. Please message me. We're still at the EMA. You can see that open of the day and EMAs right around there, but something else is happening here who's going to point that out for me. So I'm going to get rid of this, clean this up, so you can see what's going on here. What do you guys see that is going on here? Look at the moving averages. Even though we are inclined upwards, those moving averages parallel to one another. So now look at the bars. I'm going to point that out. Starting with bar 4, followed by 7, followed by 12, followed by 15. What do you guys see that the common thing is happening there above the EMA? Market is, bears are selling the bull bars, that gapping away above the EMA, because you have a trading range here. So you have two moving averages parallel to one another. And the same also opposite goes for the bears. Anytime a strong bear bar closes and gaps down from the EMA, bulls are buying, right? So you could see that we are in a trending trading range. Exactly. Bears are selling bull closes above the EMA, and bulls are buying strong bear closes below the EMA. So it's still a limit order market, right? They're betting against. Okay, two bear bars is you have, it's kind of a bear flag here. There's bar 16 shows some kind of a gap here, right? Because the 17 wick could not close that gap with a body. It's only a wick. So this is basically a small flag, bear flag. Therefore, they put a sell order underneath 17 and look to get filled. They want to close another bear bar, continue to sell is into here, possibly. Anyone sold underneath 17 or 16, looking for half the ATR, so 2.5 points. So that's 9 ticks. They're looking for a 9-tick scalp and then see if they can run further down. So they're now, bears started to make money now. We're probably coming down to this trend line or into this trading range. There's a magnet here, 1 hour EMA. We're probably going to tag it. So now you have a flag, you have a 3-bar breakout. Anybody sold there, stop above there, right? You can put it, looking for a measured move. That is your measured move, which happens to be right around where the magnet is. So the market is trying to get there. You got a wedge top, 1, 2, 3, double top, lower high. I like to see this measured move target met. So that's 75.25, I think. Yeah, 75.50, 75.25. Some machines are grabbing a quick scalp at the half R, and if they can breach it, that's going to accelerate down to here. $75.50, $75.25. Let's see if we can get down there. Trend line. It's possible that we could test the trend line. Just move underneath a little bit. But it's a diagonal trading range. They're trying to expand down a little bit. So logical measured move target is here still. Strong bear close, so the machines are buying the close of that bar, is because they repeat the same thing over and over. But I like to see measured move is measured move. I like to see that performed and objective meet. So I want a test of that area. So those is scalp at the half hour. Scalp at the half hour. They know that bull machines will try to buy the close. That bar 18 did not close below the half hour, so that's also a problem. That's why you're getting this bar. It's not an inside bar. It made a new low, so therefore it's probably wants to continue down eventually. It's just that bear machines are buying the close of 18 and scalping 18, buying and scalping, buying and scalping. If bears want to continue to come down, they're going to have to close this bar bearish, or there could be some sellers above that bar if it closes bullish. I expect market to come down to here, test the zone. Magnet is there. There are two magnets, in fact. It's the moving average hourly, although this might be plotting a little bit inaccurately. So take a look. We're already at the EMA on the hourly. The other one is the mid range, last week's mid range. And bears also want a 20 point is at 73.75. 74.75 is 19 points. Bears can actually reach the 19 points and bounce very quickly. So they seem to want to test that, but they couldn't get a follow through bar here because you're at the bottom of a trading range. It's just not a good place to sell, and bears know that. So they took profit at the half hour just in case this fails. There could be sellers above bar 19. Not a good, it's not an inside bar to begin with, so I would not buy above it. That's a flag. That's the second flag. Okay, so you got a double top neckline broken by bar 18. Even from there, if you measure, you put your stop there, market could come down to 1R, possibly 2R. So I'm looking for bears to bring the market down to, yeah. Very good. I'm one of those bears. I really want that measured move, and then the first magnet to hit, which is right there. But it's kind of inaccurate if you compare to the hourly charts. We're already at the EMA, 20 EMA, so that blue line is plotted like this. It's kind of inaccurate there, but it's just somebody's code. I can't really change it. So to me, a little bit more space perhaps. Market made a kind of a wedge top and coming down, but this trend line is important support. Remember, I said it was resistant, turned support, went up. So when it comes down and retests it, buyers are there. But this is also a flag. I want to see this bar 20 close below that trend line. Target is 75, 25 still for me, but if this bar doesn't close bearish, I'm going to have to rethink my runner here because I'm basically still selling at the support. So I need this bar to close below its midpoint, below 19 low, for me to stay in this and hold it into 74.75, 73.75 area, which is 20 points for bears. They seem to want to get. Now you have a broad channel here, okay? So you can see right here that if you draw this, right, bulls are trying to swing back up right from there. Bears did scalp, so did I. Broad channels, right? So I'm looking at like something like this. right? I'm not doing that. So that's your channel. That did not work well, but probably bears want some kind of a double top here. So bears stuck here will sell higher and look for a trap of the bulls and bring price back down again. But this is a good area. If you actually study the broad channels, how to buy and sell is you learn how to draw your trend line. So everybody's asking me, why do you draw your trend line like that? Just go and watch their 2 videos, okay? Go watch those videos. Here, let me point those out for you. So go to the trading channels and ranges, and you go to either bear or bull, okay? So since this is bullish, kind of a broad, right? And you could say tight, but to me it is, because really from here to here, right? So it's the 50%, but really I'm looking at that high, looking at these lows, right? So where's the broad channels? Yeah, trading broad bull channels. There are, I thought there were 2, but there's a lot more. Here are bear channels, bear, bear, bear. Here is bull. Watch these videos. You'll learn a lot. Like if I'm selling, I have a scalp opportunity, I'm going to take profit at that trend line because bulls are waiting at that trend line. Okay, they want to swing back up again. But if we break the trend line, that's a different story. Then here's another possible. We can come all the way down here and then bounce. This is why if I'm selling, that's a scalp. If I'm buying, I'm looking for a swing. And if it's a broad bear channel, then I swing by selling and only scalp the bull long entries. Measured move target is still valid. I did say probably sellers here because it's a flag. They're trying to sell and reach the measured move. Is anybody stuck here, sold higher, and they are fixing their trades and they want follow through. Follow through could give you 74.75 or 73.75. At least I'd like to see a 75 test, 52.75. So it's a trading range trading today. We have a trading range open with failed expansion to up, failed expansion to down. Bulls tried again twice, they failed. Bears took over, and the bulls are not able to trap the bears under the EMA just yet. So now bears are trying to make money. We haven't really gotten that measured move yet. So this is a trading range trading part 15 in encyclopedia. Probably wants to come down more. That trend line is still holding, but it's just close now. Bears want to take out the 21 low and continue to come down. I like to see at least 52.75 tested, but I don't also want to see bulls closing a bull bar above 21 open or the high. We tested the area of interest and we're bouncing. I don't like the fact that the bears might be failing here. It's the 18 bar, possible 18 to 22, 24 bar reversal at the low of the trading range the bulls are trying to get. If they close a bull bar, we could go up a little bit more towards the 817 low. Then anyone who is still stuck here will sell higher, or the midpoint of the trading range. Open of the day becomes magnet. Like I said, bears are not getting their targets. Why? Because trading range bear flags fail to break out, so you kind of have to scalp and be done. And but they will sell higher. Bulls are trying to close this gap with bar 18 and get back to the open of the day. But there are a ton of traders are stuck here, so they're probably waiting for 50% of this trading range to be tested. Trend line held again, and it's strong. We could not move underneath, so I exited because I don't want to sell higher. It could close this gap and go even higher. I don't want to be stuck there. Did a good scalping here, sold again here, try to fix it. I hope that it would come down. I still held one contract just in case. Didn't work out, so you simply exit out. You don't hold. Bulls want 9 or 10 point. 9 point is 85.25. 10 point is 86.25. Back to open of the day, you can see bear flag, second bear flag failed. This one worked. So now bulls actually closed the gap here. So if they get above the open of the day, they're going to try to get back to the upper third of this trading range. So now what is you're done. Breakouts fail. It did. So what else can the market do? Let me get that fixed. So I'm back to scalp mode once again, and but something else is happening here, right? You have another failed breakout, another failed breakout. So now if this bar closes bullish, everyone will buy one tick above with a stop underneath the first bull bar, or if the prior low is nearby, you can also use that stop. Then you can go for a 1R. And then if they finally break out, you can go for a 2R. So it's failure, several failures, 5 or more failures at the open. Market can finally find a breakout point, right? Elberg says a teaching, the slide this way. So I'm trying to find that for you. Just give me a second. Yeah, 5 or more reversals at the open can create some kind of a swing. But it could also if we don't get the second bull bar, I'm not interested in buying, obviously. But it's so far so good. We get this bar close bullish. We're going to go and test these highs again. If it fails, it's just a scalp mode. You just buy, hold, buy the failure, hold into open of the day, take some profit, and wait to see if they can actually close a bull bar. If they fail, then you just have to exit and wait. Failure, 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 failure. So 5 or more reversals, TR open, and you get that all the time. So you got 1, 2, 3, 4. This is the 5th one. Here's what it can do. Might look like coming down, okay? Somewhere, it could just reverse back up. I did say we're probably going to test the 17 low. We kind of breached it. This gap bar is, it didn't entirely close, to be honest with you. We need an overlap with bar 17. We need a body overlap. So it's not entirely closed. You see, bar 22 failed. There's a bit of a gap here still. Now bar 23 needs to close that bull bar up here. Then they can buy the pullback to EMA. So that failed. So 23 also failed. Some will say, oh, the gap is closed, but no, there's a bit of a gap there that is still open. See that? The bulls need to close another bull bar. Otherwise, we could come back down again. So here we go. Limit order trades, right? You have several. That wedged up, we come down. Bear flag failed, so we're going. It fails again. We go all the way to the midpoint, which is around open of the day, I guess. So, although according to this chart, open of the day is right here. So yeah, we test the open of the day, and then it comes back down. So today we could have this day. Okay, so this is under part 15, slide 11. Here is trading range. Trading. Top comes down, makes a new low, then it makes a double bottom, failure over failure. They try to swing. Well, to me, this is actually swing. Believe it or not, bulls are in a swing, but in a channel. So bears making money, bulls making money, bears making money, bulls making money, but it is going up. So it's a very difficult one. But so what do? You just count leg 1, leg 2, leg 3. You can sell and take profit. Then for bulls, again, leg 1, leg 2, leg 3 that's the swing. Bears are selling, but they're not doing all that great, but they're still making money. So we are entering into that trading range or trend now. So if this trend line holds, again, it is possible that we could be entering into that. So that's slide 21. So look at the slide 11 and look at the slide 21. With that large second entry bullish candle, a bar number would help, Powell, if you can actually mention it. Since you posted it 11:23, you mean this bar 18 is, wait, what is it? With that large second entry bullish candle, sorry. So the first entry, second entry, so then you're talking about bar 22. Now we'll take it for a scalp, is only for a swing. If you do take it, you're going to have to, you have very small distance to open out the day. And you're buying something that has already reached the EMA. So as far as I'm concerned, bulls already bought down here into the failure or somewhere down at the trend line. They're already scalping. It might go up a little bit, but there's not much room. So I said 17 low, we're going to retest. Bar 22 already reached there. So they're taking profit, scalping. You're buying. There's not much of a room there. All right, so I'm going to go back to buyers can show up again, but I'm going to go back to slide 11. Take a look at that one more time. So that reversal failed. So this was a reversal 1, reversal 2, reversal 3, 4, 5th reversal failed. Now can we actually get a better bear flag? So up on this, down on this, up on this, down on this, up on this. There's a wedge bear flag here. But you're in a trading range that could also fail. I think the bears are still trying to get that 1 hour, which is right there. They were forced to sell the pullback. Their stop is up above bar 18 or prior high. So they're still trying to sell and reach the 1 hour. They might even get the 2 hour because that's 5 or more reversals. You're going to get eventually a swing target or swing setup. So that swing setup already was here. This kind of upset me. I had to exit, right? And now the midpoint of this trading range is the open of the day, I said. We're probably going to test it, and that's where the bears can sell. So they sold it. You have a sell. Not a good sell signal, bar 23. Eventually, we might actually go back and test it. But for now, these bears are still swinging this down to the 1 hour. It's about to take it 75.25. If they close that body, bear body below the 1 hour, then they're going to go to the 1.5 and possibly 2 hour. But what does that mean? What happens to the trading range? Well, it starts to expand now. Then you might even get a measured move to the downside. All right, so we reached the 1 hour. We have a bit of an expansion. So let's take a look. So basically this leg right here is this two-legged move down. Leg 1, leg 2. It's just this one is a sell the close bars. Okay, is it separated like that. So now can we actually get this? Okay. But I have to see a bunch of bull bars reversing back to the EMA. So you should have taken profit there at 1 hour. Now, if you do see a bear bar closing below 1 hour, then you can continue to sell, but they are taking profit at the moment. And there's nobody to sell anymore because look what you're testing, the heart of this tight trading range zone, which is balance zone, area of interest. They're always buyers, okay, at the middle. And we just reached that 1 hour EMA on the 5-minute. So I'm looking to see if the bears are going to get a follow through here or, oh, okay, so they are getting follow through. Good. So this is now expanding down. It is possible that market could be looking for this as measured move targets right there, which is closer to the 2R. And then first defense for bulls, we might actually reach there as well. So I am more interested in if market reaches here, I'm more interested in buying here. We could vacuum down. Watch out. This could turn into a vacuum, okay, into measured move, into 2R, and then into here, I'm going to buy the reversal. I don't know if this is going to start the vacuum. This is the first bar. You can even have this as your measured move. It ends up coming down to here. I'm not sure, but we might get there. It just needs to start to accelerate. I don't like the fact that bar 25 has a very visible, prominent lower wick now. That kind of makes things a little bit difficult for bulls. But if we get another bear bar, follow through, we could accelerate the selling. So, but I don't like it when we get a prominent lower wick like that and suddenly we get a bull bar. So the bears now need to take out the 25 low, close another bear bar, then we get follow through. Bears who sold looking for a failure is a swing, double top, double bottom, right? First the double bottom, then the double top. Double top failed to break out, right? Created a double top, 2 bear bars. They sold underneath. They're in a swing. Now they have taken out that structure. They take the stop. They move it above 23. Bad buy, sell signal bar. Eventually we will get back to 23. But so far, they now want their 2R. So is anybody scalped here? They see a bar closed below 1R. They want market to come down to here. So it's magnet here, last week's midpoint, which is right there on the hourly. We close below that. We could even sell all the way to 52.50. 52.50 is right around here. I'm sorry, here. I don't know if we would get there, but we might get there. Who knows? But I don't see a vacuuming is meaning urgency to sell here. But there's a gap here right before this neckline, 64. We might need to test this gap underneath bar 49 from yesterday and then tag here and then reverse. So it would be better for bears for bar 26 to close on its low and not as bullish. Let's break out, pull back, and see if we can get more bears. What happens? We start to get bull bars. Well, then that's it. This area is holding. We could bounce again because we have a breakout. Look, breakout bar 48. Test. We broke this. When a trend line breaks, right, strongly, you always want to see a pullback, but that could still sell. So I'm not keen on bulls reversing this, but they can, depending on how strong the reversal bar is. Bears still want the 2R target. It's not even a 1.5, this one yet. So I do believe the bears will continue to sell, or they will try. The only time that I would look to buy is if I see this, right? Start to see a second try. Bears need to sell to break even somewhere near 25 low, or the close of 25 is before bulls start to show up. Then I'll buy and target bar 23. Bar 23 is a bad sell signal bar. So therefore, market will try to get back there eventually, or at least have a go. But bears are looking for possibly a third leg down. So their stuck is underneath 25. Bar 26 is an okay reversal bar. There might be some buyers above it. There might be also sellers above it. Because of its upper wick, it's kind of sizable, but the body closed above its midpoint. So there will be some buyers there. But bears are disappointed, so they will try to sell and bring market down at least to the close of 25 or one tick underneath 25. If they fail, then we start to go up. Then I'm going to look for something like this. You got a double top is above the EMA. Double top above the EMA. We moved underneath the EMA. I'm going to get rid of this just to clean this up a little bit. Here, I'll get rid of that as well. There's not much there. That was the gap. I said we're probably not going to go up because that gap is still open. So now you see that. We sold. That gap stayed open. We sold, but it's just that the bears are stuck, so they're selling at the high or the close of the bull bar. I don't trust pin bars. Never trust them. I wait for 50% of the pin bars or the open to be tested before I decide that bulls are going to buy there with limit orders. Then we're going to go up. Because if that midpoint taking out or the open of the pin bar is taken out with bear bars, we can easily come down here. Okay, so something's happening here. That was pretty fast. But you can see we just came down to almost the 50%. Some buy orders activated. And look what we just tested. Bears got trapped who sold a 25 close, brought the market down to 25 close. If this bar closes bullish, that means they are breaking even and exiting out of the market. Now we can go up. So then we could get this. Possibly back to EMA, but probably sellers waiting above 25 also. Because these are machines, quick thinking machines can sell and break even and exit. Retail traders are looking for a sell bar like this one, okay? So if they actually sell, they wait for a bear bar, sell underneath, they get a chance to break even, right? So they get a chance to break even. Every retail trader is looking for this bar so they can sell, right? So if they're actually stuck here, somewhere in the middle, they get an average price, and then this bear bar gets down here, right? It opened here, comes down here. Before going back up, it gives these bears an exit. So that's what the retail traders are waiting. Quick thinking bears, machines will fix earlier. And that's the low of this bar. So now if this bar closes bullish, we could keep going higher. That could create this. That means bad signal bar. We could get back up, or halfway up at least. This one actually reached. See, this is a bad sell signal, and it reached there before selling again. It failed, gets back up, but cannot go above the close of that and the high of that bull bar to make a new high, and then comes back down, right? So that puts us in a trading range trading. No vacuuming, so no vacuum effect is therefore we could get a grind back up to the EMA. Trading range environments is gaps close always within the trading range. Not a good start for bulls, but it's at least not a bear bar. Bar 27 is bulls still trying to just grind back up to the EMA. But look what happened here. Remember I said even if we come down, we break this upper trend line, we'll reach this lower trend line. I could have even take that. See, you see, we breached it, but we never closed the body below that. So now bulls can actually show up here. 27 should have been a bull bar. It didn't close bullish. It wasn't bearish, so bulls gave it a try, but that is now an expanding triangle bear flag. But it's tough. I don't buy these unless bar 27 was a bull close. I would have probably bought, but it's not a bull close. It's just a one bull bar. It's a doji, and there's only one bull bar, which is the pin bar. I don't trust the pin bars, and you can see that can turn into a bear flag once again. It's difficult here, but if I see a second entry long, I might be interested. So what do I need here? 28 is testing 27 low. I need this bar to close bullish. And then I can buy the close of the bar and look for a, follow through buying towards the EMA. But you have a breakout test here. So there are always sellers, limit sellers waiting. But now we get a bull close. Then many bulls will buy the close of that bar. But if it doesn't close bullish, bar 28, no one's going to buy. It could then turn into a trap, bull trap with 28 high. And if it closes bear body, then it's possibly a bear flag. But bears did sell higher. They're still trying to bring market down to the 25, one tick below 25 low. And retail traders, 27 is not a bear body, so selling underneath that is kind of dangerous. But now they have the bear body. So others stuck down here, they think they can sell the close of 28 and to bring the markets, see if they can actually get there or lower. I'm not in this trade. I'm not touching this. It's just very unclear stuff. I didn't buy, I didn't sell. I took profit here. Anyone still selling, holding stop there, now stop above 23, they're still in a swing. They want market to come to here. So that means they have to close this bar below this dash blue line and come down to the 25 low. Then you best believe we will reach there. But they have to show me that bear bar. So swing bears are still in their shorts, and they have no reason to exit. But one thing the bulls are doing, it's pretty obvious. Look at this low, right? They bought at the low, they made money. Look at that low. They bought at that low or under, they made money. Now, underneath bar 20 low, they bought again. This time, probably more than 2 points lower or 5 points lower, almost 5. Okay, is they're buying, they want to close bull bars and go up so they can make money. So that means they have to close bull bars there. Okay, if they fail to do that and we close a bear bar, we're going to take out that low and we're going to get down to here. So that means those bulls will buy again down here. So what happened was here is, and I'll tell you, anyone who was long here bought at the low. They tried to break even. They tried to bring market up there, failed. So they're now looking to buy again. This is not a good buy signal bar, okay? They're struggling. The signal bar needs to be a much better. So until we see that, we could actually come back down and we get a really nice buy bull bar, then they will buy. Then that could bring us up. So by the time that bar shows up, we could actually test this area. Okay, we may not see that bar until bears bring price down here. So they're trying to make money. They're trying to overlap with this bull bar. I didn't buy it because I believe bears will block these bulls, or at least try. Unless we start to close really strong bull bars above bar 28, then that's fine. I'll buy it. But I'm not interested right now. I can't just buy here and hope, okay, that we're going to go higher. Could this become a small pullback bull trend and just last? Remember, we had a slide like that. I need the bull close here, taking out the bear bars high, then yes. Decent bar, 29 it's an inside bar, but it's got an upper wick and a lower wick. It's not all that great. I like to see consecutive bull bars. This is still a bear flag, up on this, down on this, up on this, down on this. I don't know, we might get another up perhaps before coming back down to form a wedge bear flag. Bulls need one more bull bar to say, okay, we're able to get consecutive bull bars, and we can get the small pullback bull trend start. Otherwise, you're below the EMA. It's always in shorts, okay? We're gapped down. Bears are stuck underneath 25. I'm not interested in buying just yet. So you are either short or flat. I don't know. What flag is that? Pavel. No idea. Just going through the Discord questions. What would be the issue with selling second entry short at this point? Well, where's your second entry short? Which bar, Kevin? You asked the question 1156. This is somewhere around here. where is the bear bar? So you need a good, that's first sell, right? Rally, first sell. Now you might get that second sell. Oh, is that a Bavarian flag? Well, there you go. That's the lack. That's the extent of my knowledge of. No, it's the brand I'm talking about. But I think that's where the factory is anyway. So I should be familiar with that flag. Thank you for educating me. Oh my God. It is lunchtime. I haven't opened the question box, and I'm not going to, because I'm going to take a break, lunch break, and then I'll come back and do a couple more hours the afternoon. Okay, now, is that their flag? Wow, let me see. Maybe you're right. You're probably right. I look at the Holberg Rassi. I think that's the Swedish one. They're too expensive. They are well-built boats, but they're way too expensive. I don't think I can afford that. They want like over $1 million for that. No, thank you. I'm also looking for a Dufour, like 46, 44, 44. Problem with the boats that anything smaller than 46, you feel the waves. It's too choppy, but it gets smoothed out. Sailing is smoother if it's 46 and higher, longer boats. So you see why I didn't buy there? This is a bear flag. Bear's looking to close a bear bar below 25. They're getting their full break even now. Not necessarily. They're still short. It needs to come to the 25 low, one tick underneath. That means they get a full break even. But closing a bar like that, that's going to extend down. 2R is right here. But for this setup, this is the target. So bear's getting the third leg down. Leg 1, pull back. Leg 2, pull back. Leg 3. Reversal eventually. Remember I said I won't buy here. There's no good bull bar for me to get this market reversed back up. We need to wait for market to come down here. Then I'm going to look for good buy signal bars. That is not a third leg. We need prior low to be taken out. I would not buy anything here. So, but once this starts to reverse, we're going to test that. We're going to test that line. So I'll mark it ahead of time. Heck, what just happened there? Oh, because I'm using the wrong line. Right. Eventually, we're going to come back and retest that line. And that's when reversal happens. I'm going to buy into that. Excellent. So I'm looking for magnet to hit, which is last week's midpoint, and then that 1R from this break-even event, if they can extend it. 2R for swing bears sold underneath 17 with a stop above is 16. They're still in their swing. Stop up there is, we take out the 26 low, then the minor lower high becomes the stop, new stop placement area, which is above 28 high. But without taking out this with a bare body, no one's going to move the stop there. So the market is still selling. I would hold this. Now we might get that vacuum effect. So let's see if this is no more. Look, guys, this was right here. First reversal, second reversal, third reversal, fourth reversal, fifth reversal. Then I said, okay, now look for a swing. Okay, that's your swing. So wait for at least 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, minimum 12 bars. So it could be 16 bars. So I like to see bears. Okay, so that's that target met, and then they immediately scalp. But if they can close the bar on its low below that prior low, that's going to continue into here or here. So that's 1R. It even went one tick below. You really needed to scalp there. That was nice. But now you have a third leg. But I don't know how this bar is going to close. So if I buy this bar right here, well, it's kind of accelerating, but I could get trapped and it could close bearish once again. But so far is immediate profit taken right there. So bears who were stuck underneath 25 sold higher, made money, break even, and then made money. So that's good. But if this bar now closes bullish, that becomes a better reversal bar because you have a wedge here. Okay. I'm going to take a break and then get some lunch, and then I'll do the rest of the afternoon. We did not take out the 26 low with a bear body, so it is possible that here's what the market can do. So get rid of this. This is the third leg down. If it closes like bullish like this, wait for a pullback, mark the 50%. We start to get bull bars, then buy. This is your target. Yeah. Or pull back. So then your target also, if the bulls show up, we can also go there. So I'm going to mark that as well. Okay, bar 31 is not all that great of a buy signal bar. Is mark its 50% range. If the bears start to close bear bars underneath that, no one's going to buy. We can even take out the 31 low. So I bought nothing here. There's still the target 2R for bears. This is still a swing. Stops are still up here, not here, because that low did not break with a bear body, only a wick. So you don't get to this lower high does not get to qualify to be a good stop placement, because if you do put your stop there, if you lower it, they're going to come and run that stop. They can run the stop and then come back down once again. So it's better not to put the stop there. All right, we just tested the 50% of 31. Is if the bears close a bear bar, then you bought too early, and that's going to trap you. There's no good buy signal bar yet for any bulls is stuck up here losing money to scale in. They're looking for a good signal bar. We may not get that until we hit 52.64 or maybe even somewhere here. So this is just still sell, sell, sell. This is just still sell, sell, sell. There's a gap here. Is a good place where buyers, early buyers live, and that's where the 2R is. Anyways, the market is still swinging into that. But if we don't get that bear close, then we might start to see some bull bars. Backdoor bulls trail their buy stop order above bar 31, looking for market to reverse and sweep them into a long trade. But the moment bar 32 takes out the 31 low, they will cancel that order. I look for those backdoor entries when I start to count the third leg, because I want to get in. I want to get in as early as possible with a small risk. So I start to trail buy stop orders. But so far, it's just coming down. And that's why I said I'm not buying this, because it's got an objective and it hasn't really met that objective, which is 2R. And that's conservative 2R. That's if you put your stop here. If you put your stop here, you got a much better target, right? Or even here, that's 2R, closer to this breakout test with a gap. But I stick to my rules, and that's where my stop is. Well, it is up here now for those trailing their stops down. Okay, if this bar closes like this, those stops will be trailed up here, about 28 high. Market is still coming down. Don't want to see a micro double bottom here, because that would be a good indication of third leg down and exhaustion and reversal back up. But again, I need to see a good buy signal bar. There's still room to downside around 52, 62, 61, 60. We could test 60 right around here before bouncing. It's just slowly coming down. 20-point bears, they're eyeing around 67.50 to 66.50 possibly. I don't know if they're going to be able to test 65, but if you're looking for a bounce, we might bounce around 67.50 to 66.50 area. So I'm still looking for bears to take out the micro double bottom and continue to come down. I do have an account with TradingView. I have live data there, but I also do trade there. The fills are horrible, but it works. I take swing trades there. I have it in front of me on my phone. So we didn't take out that micro double bottom. We get an inside bar II actually. Outside bar 31, inside bar 32 and 33. So it's probably sellers at the high of 32. Disappointed. We'll try to sell again and bring market back down to the 32, 33 lows. But if we start to take out the 32 high with bull bars, then you know exactly where market is trying to go, either there or there. But disappointed bears will sell at the upper third of the bear bar or the 31 upper third or 31 high. It's identical highs and lows with 31 and 32. Bar 28 was a bull trap. So when you get a bull trap, you get an inside bar 29. They bought it and they try to exit out, right, quickly, and then you get the bar 30 like that. That's it. It's going to want to sell, right? But the bears are not getting all that great of a price action or to break out the downside. So I wonder if we can reverse back up. So first entry long 31, second entry long above 33. But when you buy that, there will be sellers waiting up there to reverse it back down. So it gets a little bit difficult. So I like to wait to see if bears are truly exiting out of the market and we get another bull bar here, then I might look to buy and then I scalp up here. But if I don't see that next bull bar, then that's it. Look, bears did sell. See, that worked out just fine. So they're coming down to the lower third 33 or the lower third of 31, 32, and they can break the double bottom, micro double bottom, and then keep selling because this is still a swing and this is the target. If we get the second bull bar, closing is the above the open of 32 bear bar, then I might entertain with one contract buy. Otherwise, I'm not interested. I scalp similar to euros. My challenge is always identifying where to scale in and where to take losses. Taking profits, it's pretty easy. I think if you start to identify is the traps, okay, that's going to make things very clear. So I always expect traps, right? When you get a breakout bar like 25, and but you're not getting a follow-through bar, and suddenly it's pulling back up, you know the bears are trapped, right? So how do you scale? You have to scale in to fix this. It's a reasonable sell underneath 25, but I did mention I don't like that lower wick of 25. That kind of is, lowers the probability of stop order buyers is, making money. It might need to pull back up a little bit. So you have to scale in upper third and fix it, right? You fixed it, and then you ended up even making money finally. But now you're not getting follow through. There's no traction. So now maybe it's time to exit and look to buy. Look, even these bears try to sell and fix it, but this bar closed bullish. So now bulls are buying. So we're probably going to go to one of these lines and test it. If they can. They just need to close the third bull bar. That would create bullish momentum if bulls actually close this bar bullish enough and get a breakout. Then your first target quick scalp would be 76.25. The next would be 78.50-ish if they can close a bull breakout bar and a third bull bar. So waiting for 35 to close bullish. That means momentum for bulls is then we can quickly get back up here. If it fails, then we continue to come down. Not enough. Bears still holding the limit area above, and they're selling, but this bar hasn't closed, so we don't know. There is still 2.5 minutes here. If the bulls close the bar bullish, I'm thinking of buying and holding is into retest of these lines, because you get a wedge here, third leg down. The starting of the third leg is the target for bulls, and we could go there easily, come back down, get above it. We might even reverse back up. I don't know about that, right? So first I would be taking profit here, but I need bulls to show me that they want to buy. Basically, there is a wedge, is leg 1, leg 2, leg 3, right? From the leg 1 ending to the leg 3 starting, I'm just finding an area for reversal. So it's a target. So you can see I scalped here, but I'm holding for more. Excellent. Open of the day becomes magnet, 85.25, probably. But we might need to pull back to EMA to buy again. So let's see if we can get a lot more out of this. So it is pulling back to the EMA, is order trend line that broke and testing. So we need another bull bar closing, this time above this trend line, and then open of the day becomes magnet, or we might even test the projected line. I'm more interested in these open of the, so this area, I'm more interested in this area. I want market to reach here. Really good bar, 35, so bulls bought. If anyone's stuck up there, is from here to there, that is the break even. That's 80% probability we might reach there. So that's just 23 low is we might get there. 23 low. Remember I said 23 is a bad sell signal bar and we are going to reach that eventually. You just need to wait for a wedge bottom and then reversal. So what about this? Well, look what happened here. That was a 1R and 1.5. So if you actually measure and find 1.5, do you see any bear bars closing below half R? Nothing. Try, failed. Just buy it. Exit out of your shorts. I actually did exit. Ended up buying above 35. Scalped here and held some. Scalped here. Now I'm going to hold more if I can get it. So I have a runner here. So that's what I have, okay? I don't want to see bear bars closing below these levels is because then we could pull back more, but that's not what I want. Now, what can happen? We have a gap here, which creates even more bullishness. Now, be prepared. We could reach all the way to the highs. We could do that. But you see this gap right here? We could test this gap somewhere in the middle, and then we start to get bull bars. You need to scalp here because we could still get a double top, but they can also swing all the way up there. Okay, so there's that possibility. But you're going against the trend line here, and it's a bear channel. So you're at the top of the bear channel. So there are always sellers waiting there. I'm looking to see if this gap stays open and the bulls buy. So I'm looking for a wick, okay, is a long wick. And even if it's a bear body, bulls to buy that bear close and then go up again. So that's what I'm looking for. But if the bears close that gap, then that's bad. You know, that would become bad for the bulls. But 23 low is target. And then if we can do better, this area, we can breach this area, get above open of the day, then projected target is right there, even that high. Okay, so that's what I'm looking for. Get rid of that. Done with this one. And also measure. Stop there. That's 1R. That's one of the reasons why they took profit and we pulled back. Now, if we get a bull close, bulls can continue to go into the 1.5R and possibly 2R. Get a bull close, bulls can continue to go into the 1.5R and possibly 2R. But we haven't cleared this yet, so I need one more bull close above this trend line. Then we should get to the 23 low. I'm going to take a break, everyone, because for one, I'm tired and I need to get some lunch. And then I'll come back. Let's see, just leave it here. This is the Globex. Oh, we did come very close to this. But not. There's some bad news coming out of Israel. Apparently, deal is not going through with the ceasefire, so watch out. But the bulls should get another leg up. 23 low is target, 2R is target, open of the day is target. We clear all of this, then somewhere here, 3R is target, which is right around here. So we could even reach there. Okay, everybody. I am off to lunch and be right back. So it's 12:30. Let's do 1 hour. It's 1:30 p.m. ET. I might come in a lot earlier than that, but that's it. Okay. Okay. If we start to close bear bars, then we are failing at 1 hour. We can then come down in here, but this is what I'm looking for. I'm looking for a bar like this and then the bulls to show up soon. Here we go. Come on, bulls, go get that 23 low at the minimum. But still nothing. Still, this is the second time they're trying to break. Come on, bulls, you could do it. Just close over. Really nice bar. So I like to see bulls show up here. Okay, if I don't leave right now, I mean, I move my stop into a place that is safe. So even if I walk away, I'll be, even if it comes down and hits my stop break even, I don't have to lose anything. If I sit here, I will never have lunch, but I also want to cash in this 23 low. It's just, we're stuck here. There it is. Took some more there, right underneath 23 low. Excellent area. Market did reach, but it's trying to get the 2R. And here's the good news. It doesn't need to stop at 2R. It's going to take some profit here. But if you see the bars closing above open of the day and 2R, hold it into 3R. Okay, so hold it in there. This is where it might get a little bit dicey because this is the projected line. So it's trying to reach there. 2R right there. There will be a ton of profit taking there, but I bet we're going to breach that and go higher. So, all right, great. I just tightened the stop even more. So after taking a little bit of more scalp here, I am off to lunch, and you guys should eat something too. Nourish your body. I know nobody wants to think about food right now because it's such a great price action. But that's 2R, so give yourself some reward there, okay? Okay, it looks like bulls tried their best here. We did get the 3R, but we didn't really tag this line here. We might, I mean, but you do have a 1, 2, 3 wedged up here, so you got the 3R tested. So now if the bulls can use this area as support, they can go for it one more time. But I'm just looking to see how they're going to handle here. 49 is a second entry short from the new high inside the trading range. Bulls are buying because it's a trading range, so they're trying to break even. They might need to move this bar a little bit higher. If they can reject bar 49, then we'll definitely go and test this trend line. We might even get the 4R, but we did get the 3R. So that was accomplished. All right, so support is holding, and bulls did buy. So they're trying to get back to break even. They're stuck above 48 high. looking for, if the bulls can manage the one more high, we could get a spike pullback. So this is a channel up. Okay. We're in the middle of it. So I like to see one more test, but look what's happening here. I don't want to see this bar closing bearish, because then that would confirm that the bulls actually did get a break even, or at best they tried, and then suddenly we could get the second leg down for bears. So here's a leg one, deep pullback, we could get the second leg down. So I want to see bulls close a good bar. Last minute, we have a minute and a half, but if they fail, this will be a pullback and we could get the second leg down. It could be the second leg pullback of after the bullish second leg. So leg one, pullback, leg two, leg one, leg two for bears, and then leg three can show up for bulls as well. So this is basically after the second leg up, bears are counter trend for bears, second leg down. So although that hasn't started, it's just a pullback at the moment. But the way that this bar is about the close, it doesn't look good for bulls. And we can pull back down to these low of 48. Just waiting for this bar to close. I'm not selling anything here because it would be a counter productive. Yes, the bears want a second leg down, but if I were to sell anything, I would probably have a sell stop order underneath 51 waiting. But I'd be selling into a support, and this is a bullish channel trying to go up and trying to get the third leg up. So do I want to go after that second leg down? Probably not. It's bullish. Don't want to trade the counter trend. But anybody wants to get in and short this, waiting underneath 51 with a sell order. As soon as the bar goes above 51, they're either going to cancel the order underneath 51, or they will wait for this bar to close and move it underneath 52. Because then they will be looking for a backdoor to enter. So it looks like bulls want to get another high. This trend line is still target. You have an inverse head and shoulders here. Left shoulder, head, and right shoulder. And bulls want to break the resistance and make a new high. But we are in a trading range. And it's pretty strong is resistance up here. So what could happen? Can the bears actually sell and come down, test these lows? Yep, because we're in a trading range and this area is resistance. We could in fact get this. If we cannot break out to the upside, then we will have a swing down. This was the first try to break above the 3R. This is the second try. So bulls need to either break out or give up. We get a truncated wedge, and then we start to come down. So if this resistance cannot be broken, bears will try to sell. The question here, bar 38 low to bar 40 high. To bar 44 low, to bar 49 high and down, considered an M pattern. 49 or 50 is, yep, it is. To me, it is. Double top, neckline. But this is not a good sell, right? This is okay, but it's the first, so we need a good sell signal bar. But you're in a spike pullback channel up, right? So you don't want to sell anything. It's kind of, I don't know. Right here, I think the bears lost their chance to sell. They should have sold okay and made money underneath 49. So right there, it's a problem, and I don't like to sell. It's a terrible, so it's like this. This is a terrible AM, you know what I mean? Terrible double top. So this would be my new double top. I would measure it like this. So it would be the double top 49, and say this is a bear close, right, with bar 53, and then neckline 50, but I don't have that set up yet, so you need bear bars taking out the prior bar's lows. So the bulls are still pushing this higher. So we looked at this, and that was the slide number 11. Sorry, this is 15, but 15 has a similar look. Right, so it's right here we have down market, and then we just go back up, test those highs. If we start to get this, okay, we might come down and test the lows, but I'm more interested in the slide 11. Yeah. So here we just go up a couple of legs, right, and then start to come down. Now I don't know if this is going to happen. I don't see anything here bearish, so I still expect market to go and reach one of these lines. But if they try and fail, then I'm going to look for reversal pattern here, which what you see here could be a reversal pattern. We made a high, and then we came down, and then we made a new high. We might move underneath the EMA eventually, but I don't have bears showing me any strength there for me to sell anything. So as far as I'm concerned, bulls are still pushing this higher, especially with bar 40, 52 and 53, two strength bars. They're trying to break out. Bar 53 is a breakout from the inside bar 52, so bulls want at least a small leg and two up. So you can't really sell anything. I think the bears lost their chance there. So what does this mean? Look, you have a reversal pattern, a flag. You have a cup, another cup, and a fail to come down. So what I do is I measure this and project up, and I look for a measured new target, which is right there. So, or if you want to keep it, but it hasn't set up. So if you want to keep it conservative, you can measure this, but we need a bull bar closing above 49. So you can't really use that, but I can use this, because there was a double top here and failed. So now bulls are trying to take it upwards. So here's the health R, which is right around the trend line, but we need follow through breakout. If that doesn't happen, then the bears will take over. That will be your double top, and that will be your neckline, and then half R and 1R. So bulls are failing, bears might now take over. But it's not clear. You just need the bar. So backdoor bears entered already underneath 53, but not a good bar to sell. So they're looking for a scalp here, and they're hoping that the 54 is going to close on its low, become an outside down bar is it is already an outside down bar, but outside down bar with a good sell signal, meaning the body closes below the 53 low or on its low. Then you're going to get bears selling. But what if it closes outside up bar suddenly in 1 minute and 55 seconds? Then if you sell now under a bad signal bar 53, you could get trapped. So it's better to wait, because bulls are still looking for I messed that one up. That. So in a situation like this, you can buy at the EMA, take profit at the high. You can buy at the EMA, take profit at the high. And that's what they've been doing. We're not getting good breakouts. Look at the breakout, no follow through. There's no breakout here. But we're channeling up, so let's wait to see if the 54 closes bullish outside up, then this will be no more. I'm going to remove that for now. In a trading range, bull flags fail. If this one didn't break out, that one also can fail. So that's what you're getting at the highs. Well, you got an outside down bar, but the body closed above its midpoint. Not a good bar for bears either. But second sell from the highs. So bears sold underneath 58, 53, disappointed. They want to get a bear bar taking out the lower wick of 54. But right there, that becomes like wishing, hoping, and it's difficult to trade. If we get that second bar, then that's fine. Especially if we get the third bear bar, that's sideways and down, you would expect another leg. Technically, it is a second sell, but it's just very weak. Market is trying to become bullish again, and it's trying to set up. So the 4R is target, because if we close a bull bar right up here, market will reach here, can even reach up there. It is possible. I don't like to buy this high in a trading range. We'll try to get that breakout. Trend line is target. Let's see if we can get that. I don't like buying too high at the trading range, but I'm entertaining with one contract at the moment. See if we can test 93. I don't know if we're going to be accelerating. We already made a wedge top here. Don't like this. I want to see bulls do much better here and keep pushing this higher to test 94, 95 perhaps. So we need another bull bar. Be nice if we can actually test 94, is maybe 95, and then come down. Bulls have a nice breakout with bar 53. 51 is an outside bar followed by an inside bar. You get a good breakout from the inside bar high. 52, so leg 1, leg 2. I'm just looking for a little bit more from bulls here. Or just accelerate and go up. It could test 94, it could test 94.50. It could test 95 and then come down. It could test 95 and then come down. That's a small flag, is 3-bar flag. Looking for a breakout. See if we can get to 94 at least. Okay, excellent. That's half R from this, but I'd love to see bulls do a lot better here. So we're going to the 4R, which is right there, slightly above the half R of this measured move, this failure. So this move, this trend line is also target. Close of yesterday is magnet. We could get above close of yesterday. Measured move is slightly above. 5300 is obviously is round number that we've been testing, but there's resistance up there. Sellers could be waiting around is 52.97 area. So I like to see bulls push and grab or test right here. Give us the 4R. But we got a wedge here. It's a broad bull channel. So the bulls are swinging, bears are only scalping. Right, so let me do that again. And see if I take maybe that high, that right there. They are swinging into the midpoint. Midpoint is right there. Slightly above is my projected target. I don't know if we would reach there. The high of 16, we got it. 13, we got it. So I just want a little bit more follow through from bulls and not give up. So the midpoint of the channel is right here. I would like that to be tested at the minimum. So you should hold. I'm holding. I mean, this is beautiful. Ooh, oh, ooh, doggies. Oh, I love this. Go, go, go. All right, we got my targets, the midpoint of the channel, and then, well, that's the failure. That's a one-tick failure. But whatever. We're probably going to get it anyway. Close of yesterday's magnet. We got the 4R. We're probably going to get the 5R, but I'm more interested in the measured move of this right here. Okay? It's only logical to get there and tag it. So let's go. But be careful. Hopefully we can get above the close of yesterday and start to accelerate. So we just got my target line, but that's the conservative one. I'm more interested in this measured move and that right there. So at this point, you should be holding and is looking for, let me see where else we can go. looking for a market to get above close of yesterday. So I want to see 0225 tested, but I'm kind of pushing this hard, but you need to pay yourself is in case we trap all the trading range highs close of yesterday. I like to see bulls actually test here and then trap. But at this point, I don't think we're going to trap anything. We're just going to keep going higher. No one's going to get trapped here until 53.05 possibly. 53.05, there might be some sellers up there. So this is just, wow. I mean, aren't you glad you held? So it's similar to yesterday and the day before, right? So that right there is happening right here. So market is, remember, is June annual bull rally begins. So you should have marked your calendars. This could be that bull rally beginning. Okay. Remember, this is a trading range and we're testing its high. We could get a rejection here, so be careful, okay? As far as I'm concerned, we have met my target. We also met this target, which is measured move. Look, we went one tick above. Everybody's taking profit there. 0250, 0250 right there, tested. We tested 0275, so that was one tick above. It could still continue to go higher, just depending on where they close this bar. The next is the pit stop, 53.05. I would definitely expect sellers there. But really nice price action. Hopefully you guys were going long and not selling anything. I expected bears here, possible double top neckline, but they failed. So once they fail and you get this, it's like they're reloading, okay? I call this a shotgun. I know you're gonna laugh at this, but you know how the shotgun is? It's like you have your barrel, right? You have your barrel, and then like this, right? You put your bullets in, right? Slide right in, and you're holding. Think about this, and then you just move it up, and that suddenly it's, this just snaps. So that's it. That's what's happening here. They just reloaded. Excellent. Thank you, Josie. I'm sorry, but you understand what I'm saying. I'm not really a gunslinger here, but it's just that when I see something like this, that's a shotgun, and it's about to shoot. Okay, so to me, that's a breakout. So never mind. I'm gonna get an earful from people, all the Democrats in California. Oh man. All right. Okay. Anywho, that's your shotgun. Okay. Long range shooting. Oh man. Sometimes I run out of analogies, but this is that kind of a pattern for me. There's no way I'm selling. I'm definitely going long. Kevin is like, I like this. A little bit of fun. All right, so we're about to get my swing projected target right there. We got this. I mean, at this point, sky is the limit, right? High of yesterday, open of the week. The top of the broad channel, these are all targets. So you should be running a contract. But there are sellers up there, especially right here. Just be careful. There will be a ton of profit taken there. Or somewhere around 53.09, 53.10 is 53.10 possibly. We're gonna get a rejection. We're gonna come back and retest the 53.05. Really, really good. Oh my gosh. I mean, I'm glad I came in here on time because I was watching one of the Game of Thrones rerun shows, and the rose killed the lion. You guys know that? I started watching yesterday. I was like, I'm just gonna have my lunch and watch the rest of the episode. Rose killed the lion. That's when Joffrey dies at his wedding. I don't know if there are any Game of Thrones fans over here. And then I just remember, oh, wait a minute, I'm running the live stream. I better get back to the desk. And then I come in right on time. Glad I did, because I caught this. Because I'm trading this, but I'm taking profit here. Yes, we're probably going to get there, but I would be super careful here, because there's a bigger trading range here, and the sellers were a lot more stronger. Look at the leg down. We might get above it, but there will be sellers waiting up above. Now, remember this morning analysis, okay? So market comes down, find buyers, right? Where is it going? This can continue to go up all the way to here. Bulls want to close somewhere above this to set it up for tomorrow, so they can actually get into here. But there are sellers waiting in this area, because it is the sell zone, okay, of this mother bar. And we only sold once, so we're definitely going to sell again. So we could, in fact, so where are we now? So 53.08. It's not so far away. That is, say, 09. That's about 20 points away. Can we get another 20 point into the close? There's plenty of time for market to give us a 20-point swing here. But first, I'm interested in this, 1575, okay? If we get the 1575, or say 1550, just to be accurate, right? We could just get rejected there, and the bar can come down. But I think we're going to buzz through 1575 or 1550, and we're going to try to close this gap, okay, and reach here. That's only 21. No, that's only 20 point away. 20 point is nothing. It's not even 2:30 yet, 2:30 p.m. So there's plenty of time for bulls to pull back a little bit, take profit here, pull back, and then reload once again. Or we're not going to even pull back. We're just going to buzz through this resistance, and we're going to go into my area of interest. So here is Asia 1R. Asia 1R is 53.11. Take profit there if you can, and then hold some into this 2R Asia breakout, bullish breakout, 2R target and area of interest. I know I put that in haphazardly, so I'm just going to check my work. Sometimes I'm too quick to put a zone there, and I may not be very accurate. Oh, you guys, I hope you guys taken profit. I said we're going to pull back here because it is resistance. It's also profit taken. So did anybody take profit here? We could still reload depending on how this bar closes. Remember I said we're going to come back and test the 53.05? Why is that? Who's going to tell me? Look at bar 59 and look at 05, the pit stop. I said we're going to the pit stop, but we buzzed through the pit stop. So that means we overshot. And then I said we're going to come back and retest that, right? 53.05. Why? Because there were machines sold automatically. There are companies that actually put sell orders there. But when their sell orders are violated like this, they sell higher and they expect market to come back to the pit stop. And that's what's happening here. So you really need to take profit there. Good. But this doesn't mean that we're done, except that if we get a 2-bar reversal, that means bar 60 has to be almost the same size as 59 and close as low as possible. That will be a 2-bar reversal, and the market can sell. We don't want that. We haven't even reached the Asia 1R. I prefer bulls to actually get there. And not only that, we close a bull bar above the Globex high. We can not only get to the 53.11, we can accelerate and go up here. So we just need to endure this pullback a little bit. But taking profit is a good thing. You should always take profit, right? Because I don't want to see any surprisingly big bear bars, nor I want to see any outside down bar, because this bar 60 is higher than the 59 high. If in 2 minutes they close that body surprisingly lower, and it becomes an outside down bar, that won't be good. So it's better to take profit. You can always add back if you see bulls take over and get above 53.11, 53.13. I think there is a 40-point zone. Like I said, we could get that 20-point. It's not that far. That was 53.29. And market could reach there. Plenty of time to do that. We just need to pull back a little. I go with measured moves. This is measured move and a half at the moment. I go with 1 hours and 2 hours and whatnot. There's a much bigger measured move here. You don't need to use this. So here is right there. Beautiful bar. Market could push into there. So that's 53.2650. My target is 29. So we could reach there. That's not so far away. I use the magnet, so my profit taking is based on what's on the chart, like my measurements. So I'm a chartist, so I use these levels. Okay, so these are done. So I'm going to clean this up a little bit. Get rid of this. I think market is pushing towards the channel high. Broad channel, that's a beautiful swing. Just do yourself a favor and watch the broad channels videos, how to trade them, bear and bull. It'll make sense that why bull swing and bears only scalp in this case. Yeah, I just used the price action, Kevin. The goal is to trail the stop and is always be risk off. But some people will argue and say, oh, no, I never move my stop and keep it here. Okay, but that means you have a really large size account and you can endure any pullback and buy any kind of pullback. I can't do that, so I have to be risk off trader. So everybody's style is different, right? And there's a double top here, 59 or 60 high and a 61 high. Neckline 60. There are some sell stop orders start to pile below the 60, but again, these are breakout bars and a follow through continuation bar. There's nothing here yet to sell, except suddenly this bar closes down here, then yes. You can exit below a strong bear bar, but you have a tight bull channel here. Even if we come down below the 60 or 59, buyers will jump in. The backdoor bears looking for an entry and a couple of point scalp and a runner, but you do have a tight bull channel. Probably the break of the trend line, they're going to try to fade the first bear bar they see and then go back and test the highs again. But I did take a lot of profit here, so I'm not going to lie. I'm still holding. If the bar closes weak bearish, I might buy again, but I don't like the way it's coming down at the moment. We got the open of the week, yesterday's open of the month, open of the week, yesterday's open, all magnet above this clustered area and high of yesterday at the same time. So market wants to seem to get above that. We have a really nice breakout of the Globex. It's come back to the breakout point. So it's breakout, pullback. let's hope that bulls will show up and we're gonna get to the Asia 1R, 2R, and this is where I would like to see bears. But if the bar closes bearish, feel free to exit. It's a little bit more room to upside, I think. I mean, we can even, yeah, so 53, 24, 26, and 29 are my target. This one is 1550. I'm talking about here, 29.75. Let's roll it to 30. Buyers probably under 59, above 58. Support here, support here. We could pull in here, but it's support, most likely. Bears see a double top neckline. There's some sell orders under 60 piling, but it could be a scalp, not a swing. That's an expanding triangle bull flag, believe it or not, right there. So bulls are not going to let go that easily here because their stuck is from above 59. They bought above 59. They might even have bought above 60. So they see a flag in the form of an expanding triangle. Bears want another bear bar. But the bulls bought the close of 61. So what does that tell you? They're trying to break even. But that break even attempt could end up becoming a breakout attempt as well. So no second bear bar with 62 close. Bulls are going to get another breakout to upside. But if we get the 62 close bearish, then we go into the green zone. And then that's where the bulls will buy again. 61 is a profit-taking bar, not necessarily sell bar. Okay, so other bears are still watching from the sideline. They have not entered the market. They're looking to see how strong the profit-taking is. It closed on its low, so it's kind of strong. It went up, trapped the bulls, and then came down. So it needs another bar or two into the supports. But so if you are a bull stock, you buy. You barely made it to safety. Look at that. So are they exiting now? If this bar closes bearish, we'll definitely we might actually end up testing the 58 high. This is why I took profit here. But I'm still holding. There's still 1 minute and 55 seconds for bulls to close this bar bullish. And because 61 is not a surprisingly big bear bar. Yes, it's big, but it's not a surprise. Here we are. That's not the bar. So you can see that the other bears, they're not really convinced to sell. The market needs their money invested in to sell and move this with a couple of legs down. So if those guys won't enter, this ends up becoming a profit-taking bar and the bulls can still continue up. That hasn't been decided yet, but we're watching. We'll know. There's still 1 minute. See what happened with that bar 61? That is the first bar, right? So you got a tight trend line, right? Tight bull channel and a trend line, and that's the first break. I said that most likely the bulls will fade that first bear bar they see, but they try to go back and test the highs. They're not doing all that great either. So the bears want a second leg down. So now is, if we take out the 62 low, we can come in here. But are they going to be able to? That's the question. I like to see the highs tested, so I'm not selling anything here. If I were to sell anything, is my sell stop would be underneath 60, and then it would be moved underneath 61. Since these are equal lows, 61 and 62, I'd be waiting underneath 61 to get filled. I'm not selling any of the closes. If market is bearish enough, they can fill me in on their way down. Okay, so if they're not all that bearish, I always expect highs to be tested in a situation like this tight bull channel. First break of the channel line is a fade, so why sell, right? I don't want to be trapped. See, the new bears didn't enter the market. When that happens, all you get is a 1 bar or 2 bar bear bars, and that's it. So now they're still watching. They're looking to see if the bulls are going to be able to take out the prior high and continue to go up, because as far as I'm concerned, like I said, this is an expanding triangle bull flag. So the bulls want new high. Now, if that fails and we make a double top instead, and then we get bear bars, that will be a second entry short. I'd be happy to short that, but if it sets up, otherwise this is just going to keep going higher. Right? We have a measured move target up here. Bulls want that. There's a channel high. There's 2R from this failure, right? There's 2R. There's channel line. There are magnets. Open of the week, open of the month, high of yesterday. And then on the higher time frame, we got the area of interest. So we're just about to get the 1R of Asia bullish target. That's 53.11, which we haven't really tested yet, but we're almost there. All right, we got that one. So now it's pushing higher. $14.25. If we clear $14.25 without selling after we test it, we could easily go to 24, 25, 26, and 29 or 30. So remember, I said market could get to here, that's 1550, and then accelerate and get to 29 or 30. So I think market is trying to, if we're going to fail, this is where we might fail, 1550. But what is that? Oh, yeah, that's open of the week, open of the month. So I'm not interested in exiting out of this. 40-point bulls is 17. So it's 53.17 is 40 point, but we don't have to stop there. We can get another 10 points, 5 to 10 points above 17. So we could end up going to 27, 29. So it's still doable. We're just trucking along. Now the question is, are they printing Benjamins in Orlando, or are they following our calls here in the trade room? What do you think is happening? Imagine that. Oh my gosh. Okay, now I'm being cocky. I'm just kidding. It's a joke. I bet they were sharper. Rose who? Who? Who's she? We don't know her. Exactly, Rick. Yeah, I mean, is you got a leg 1 right here, pull back. This is leg 2, so we are in leg 3. Although one argues, right, we didn't take out any of these bars lows. So how is this a pullback? Well, it's the equal lows. Okay, so we don't have any bull bar closing above these highs. But to me, that equal lows is basically separator, right? So this is the third leg. So don't get all excited about just because this just came down. We're still testing this trend line. Bulls could break above it. We have this measured move up here. I'm eyeing this measured move. It's also the channel breakout, 25% breakout target line, this green line right there. So I want to see at least this channel line tested. It's just a profit taking at the 1 hour. Bulls are taking profit there. As far as I'm concerned, we can also measure this. I mean, I don't know. That is 53.34. We might even get there, who knows? Or this beautiful bull leg, just measure it, that is 60.75. That's a lot. I don't think we'll be getting there anytime soon. Maybe how far? So 32, 33, 34. I mean, if we can accelerate, I'm okay with this. If they want to give me this, that's okay too. It's been great. I mean, every afternoon we're getting a really nice squeeze, short squeeze. So is anyone trying to sell, getting squeezed out of the markets today, yesterday, on Friday? So this keeps going because with June, I don't know if Al is coming in on, I don't know when. Is it Thursday morning? I think it's Thursday morning. I think I'm on again tomorrow. So he'll probably talk about the annual rally with June. This could be the start of that. That's why we keep pushing higher. But it's a kind of a bummer that we haven't really made a new high with a bull body. I don't like that. And we did not cross above this trend line either. So that makes me nervous here. If we get a strong sell signal bar here, this could be it. Bears then can sell. Neckline 61 or 60. Bears are trailing their sell stops. They might be even under 64 waiting, but that's a bull bar. Probably buyers there instead of sellers. But if anybody's looking for a backdoor to enter and sell and make quick buck, they're under 64 waiting. I just wouldn't sell there. Dean is asking 40 points, where would you measure? Let me show you that. So depending on, I want to get rid of this. You can have it on your chart. Look here. First measure these pullbacks, right? If they're more than 10, you cannot measure from down here because trend resets, okay? Bears actually took over, started a counter trend there. And they were able to swing more than 10 points. All the way down here, they were bearish. So the first time the bulls started to show up, it's with the close of the bar or the low of the bar. So I would measure from there. And so my 40 is right there. But I want to measure one more time here. I don't know. Hopefully that's not 10. Okay, so that's not 10. See, they didn't reset the trend there. So the bull trend is intact from low of 45. So that would be the 40 point right there. And that is 1950. Yeah, so you might go there. But if you count from here, since it's not big deal, you could say, hey, I want to use the pivot. Then remember I said it's 17 something. Yeah, so that's 17. You can also use the pivot. That's okay. Just to be conservative, you can say that's the 40 point. Market right here came down. And then that was a huge rejection. But I think we did a lot better. See, I don't like that now. I'm out. This time I'm out. That's becoming second entry short underneath 65. That's why I posted there. We could get something troubling there. That's second entry short from the high, right? And what about not coming down and suddenly this is high 1 and we get a high 2? Well, you got 2 bear bars now. Unless the bar 66 closes bullish suddenly, then there will be buyers 1 tick above that bar. But you're trying to buy against 2 bear bars, especially with 66 closing strong. There will be sellers above 66. So I exited because I really I didn't feel like fixing anything because it can come all the way down here. Well, I did sell this bar and scalped. Remember I said if we do come down, we're going to come down here. Those backdoors, bears did enter with 65. They did pretty good, actually. I'm kind of bummed out. But what happens to the 40 point? Well, let's measure. Right. So that is just about 10 points. To me is, I don't know. We might still go there, but at this point I don't care because bears did sell about 10 points. So if I measure for bulls, I don't measure for 40, but I measure for 10, 20. Yellen is speaking right now. Support is holding. Bulls disappointed, bought again. But you saw the problem, right? I mean, we met that 1R, which is good. And we have a breakout pullback to the breakout point. What didn't happen was that bulls never closed the bull bar above that high. So anyone who was selling here, disappointed, sold higher, prevented. So basically, technically this is still second leg. Even though we made a new high, to me that's still a second bear leg for this leg. Okay, sometimes you get this. As long as we don't have a bullish close, body close, you can consider this. This is actually explained by Al Brooks several times in a live trade room, and I believe in his books, maybe even in the course, because I remember hearing it. And anytime I don't see a bull, the body not breaking above, I don't consider that a breakout. This has failed. So to me, this is still a second leg for bears. So bears trying to bring it down to these EMA, and there it is. So now you have an M pattern or double top, right? So that's the high, that's the neckline. And that's 1R, 97.75. 97.75. Actually, I'm wrong. 97.25. Yeah. What are they? What are they? Whew, look at that reversal. Oh, that's 1.5. So I think we're going to the 2R now. I'm holding. I sold again. I'm holding. Once I did the measurement, I'm like, okay, let's hold it. Let's see if we can get to the 2R here. That is a climactic leg up, failed breakout. That's the third leg trap. So now we come down to the climax starting point, which is right there. Hopefully we can get that 2R. I mean, this is 1.5 expansion of the profit taking, but we're so close. I would hold. This is what I'm holding. I'm literally 2 ticks above this 2R. I want the 2R. I just want to scalp earlier than everybody else. I might need to endure a pullback here, but I expect market to come down at least to the high of 49 and then breach that a little bit and then bounce. So there it is, there it is. Ooh. Let's go. I'm literally 2 ticks above it. 89, 90, 25 is where I am trying to get out early. Well, we didn't get this, but it's, I mean, it's kind of close, right? I mean, look at this. You're not getting this basically on a higher time frame is this. If you look at a higher time frame, you would see this. So basically you're getting a full rejection. Think of it as that way, but it's a variation of it. See, we never took out that bull bars high. That's a bull trap, and then comes all the way down to the climax starting point, and then it bounces. So come on, 90.25 is where I am. Now the question is, am I going to get it? Oh, suki, I got it. So how you guys doing? You should have taken profit right there, 2R, because it's going to bounce. It's going to bounce. All right, I'm going to go celebrate this with a cold glass of water. I will be right back. Are they still selling? You kidding? Well, a bar like this, you'd expect that. But I thought that maybe we would bounce here because it's a breakout test area. But it's a very strong bar, so it's okay to expect maybe even another leg down, small leg down. Or before reversal, we might need to get another micro wedge, and then we would bounce. But this is now a full rejection. Right here, there's a breakout. Okay, so here's a breakout, come back down, breakout again. Oh my gosh, what was that? Can you guys hold on? Sorry about that. So there's another pullback breakout or breakout. So this area, we might still come down. I like to see maybe like a 3 wedge bottom and then reverse. But at this point, this bar, this area is profit taken. ATR is too big, so it just overshot it. It's most of the day was sideways in a trading range, so open of the day is still magnet. What if here's a crazy idea. What if market continues to sell and we actually end up coming down here and close the day right here? We are right at the apex of the expanding triangle. So this is support, but if somehow bears manage to move underneath, we could go and test that low and then possibly even come down here. So watch out, because there's still an hour, and this one is bouncing, but we have an hour. This was the end of the day for them. So too bad we couldn't make our way up, but we reached that target at least, and we couldn't get above this trend line. So I expected possibly, and I was looking for rejection. When can we get a rejection? And I saw that chart. I'm like, oh no, we're going to come down. But it was lucrative. So I'm going to get rid of that now. We're probably going to get another leg down, so be prepared. It's a really strong trend bar. So how do you sell this? Well, it's an ATR bar, right? What do? Look, we tested the lower third of this channel, found some buyers. So what I do is I measure this bar, only the body, not the wicks. It's an ATR bar. I'm looking for pullback levels and see if there are any sellers. First pullback, limit sellers are at the 33%. So that's, let me get this accurately drawn. Okay. So here's the 33%. There are some sellers, but I would like to see market to push into 50 and then sell. When do I expect a full recovery? If the bulls start to close above 66%, then we close this gap and go and test the breakout level, maybe even the starting point. But I doubt it. A bar like this should sell another leg. So basically leg one, maybe leg one, pull back, leg two, pull back. We need a leg three. Because technically this is the leg two, okay? So, or if you say, no, this was the leg three, this is leg one, pull back, leg two, pull back, we could get a leg three, yes. But I'm not going to sell anything until I see 33%, 50% tested first. Okay, so you had a gap here and the bears closed that gap. So we're looking for a pullback, and within this gap area, I'm looking for sellers. So I want to see a rejection candle in the form of a bear candle or a rejection candle like this with a strong upper wick. Look at that. Technically, we did test that 50. I mean, if I really squeeze it, if I'm not, there is a failure, or is there? So that's 97.50. Now it's exactly 97.50. So we did test the 50%. Now, if we start to close below the 0%, we're going to come down into the minus 66%. And that's going to be your third leg down. So big move up, made a new high, and then comes down. Leg one, pull back, leg two, pull back, leg three, or complex, leg one, pull back, leg two, pull back, leg three. So we could get that leg three all the way to 66%, maybe even minus 100%. So it's the measured move of the body of 67. But I want to see first close below 52.90.75 or 52.91, and then see if we can actually sell with another leg. Good rejection bar 69, but didn't close bearish. Bulls can still fill that upper wick. That would be their second leg up. Leg one, pull back, leg two. As long as we don't close above 33, market can sell. Otherwise, we could go right up to 66%. So I have not sold anything. I also did not buy anything. Bulls are stuck up here, probably. They didn't see what we were seeing, so they got stuck. So no one's going to buy in the middle of the sell-off. They're going to buy at some support. And what's happening here is that if anyone went long, high one above high two, maybe they went long there, they went long above, maybe above 68. And they're looking for a market to get to 66% or as close as possible to this midpoint. They could do that, surely they could do that, but they can not only do that, they could also close beyond 66% and close this gap and even test up here. What about this being a deep pullback? Because remember, this right here is a wide, or broad channel. So you're getting deep pullbacks. What happens, let me get rid of that. What happens if we close above 66%? that generally signals me that bulls could close this gap and become bullish again and wanting to take out the highs. So could they swing? Remember, bulls swing, bears scalp. So I'm still expecting another leg. I will give up on bears if I see bulls are closing above 66%. Right now, I'm not giving up on the bears. I'm still expecting the third leg down. So this is the counter trend, second leg up. And you're trying to buy against a very strong bear gap. I mean, there's got to be some, bullish pressure. If institutions want to close this gap, then they have to show me, then I'll go with them. But I need to see this 50% breached and the 66% breached. And it's trying to reach here because these bulls are stuck. They bought above it thinking it's second entry long and they're going to get a lot more for what they bargained. They were going for this measured move targets and they failed. So they buy at a support or a breakout test. They're looking for get us to safety now before we lose anything. I don't like going against big bear gaps, big bear bars. They're always sellers. So this is why I did not buy anything. The only time I give up on bears when they truly signal me that selling is done and it's being rejected. That's when I see strong bull closes above 66%. Then I'll buy, take profit at the starting point of that gap bar, and then I'll leave a runner to the prior high. But that's not happening yet. See, now I'm expecting another leg. And that's what it's supposed to happen. But we'll see. I still need a bear bar to sell, so I'm not selling anything here either. I'm still flat. I'm very happy with what I did today. I don't want to give back anything. That's 3 bars. 3 bars is kind of momentum, but 2 of them closed below their midpoints, and they got upper wick rather strongly large. So, but 3 bull bars stacking up like that and gapping up like that at the open, so that's actually a good sign for still bulls. They're still trying. I don't see a bear bar to sell either, so I'm just going to sit here and wait. Maybe bulls are trying to get to that 66 and beyond. I mean, look, I don't know the future. I can only read the bars. I go with what I see. This is okay momentum. Would have been better if these bars were smaller with almost no upper wicks. Then I would have expected this, maybe just the small wicks, right? So like that, like this, and you get a big bear bar, right? And then suddenly you get this big bull bar. That I would expect, but that's still inside up within the range of this. It could still fail. Upper wicks are a problem on the 69 and 70. So you're basically getting this right here. We might need to come back and test here. Here's another example. We're getting reversal here, but not a strong one. So all of these bars combined, basically this bull bar, okay? So what they're trying to do is they're trying to go back to the starting point of this bear leg, maybe the up here, maybe up here. But we really need to close bull bars above the 50% and the 66. Then we can do this in a different variation, but we can do this. And a close the day is in this trading range. Get rid of that. Or something like this, in fact. Right? So, can you guys see this, or do you want me to enlarge the chart? Can you see this? If this is too small, I can make it larger. Richard always tells me to make the slide bigger. So you see this? So that basically goes, the 50% comes back down and then goes to the 66 and beyond. But this one got 3 legs, leg 1 pull back, leg 2 pull back, leg 3, we didn't even get that yet. Bull trap, second leg bull trap, and then comes down. It is form of a rejection, but it really needs to get above 50%. Here, it's much better. Representation is, it comes down strong, it goes up and up and up and up and up, but eventually it comes, exhausts, gets an exhaustion and it comes back down, and then double bottom. So that's that shotgun I talked about. Or somebody say, hey, that's a pony, we call that a pony. But it really is, that shotgun is about to break out. There's no such pattern in Brooks' trading course, so just you can disregard it. But you see this, it gets exhausted, so we might actually test the 66 and then come down. I think the bulls are trying to get to this safety, which is this blue dash line. This whole effort of small pullback bull trend they're trying to put in is to get to here, because they're trapped. Because wicks are bad price action, is I get a lot better accuracy. I've tested it a long time, so I kind of came to a conclusion is body creates the breakout, not the wicks. Because there's slow moving time frames, so simple moving average is fine. EMA is for exponential fast moving time frames. I think that's why he's using, but the question should be asked Al. I don't even use, I only throw them on there because he uses them. Is normally I don't, in the higher time frames, I don't even use any moving averages. So you can see momentum is still intact and the bulls are doing a lot better now. So it looks like they're still trying to close above 50% of the SPAR, still holding. Notice it's still holding. They still haven't accomplished that. So there's a leg 1, pull back, leg 2, pull back. We need one more leg to get to that safety. I mean, at this point, I'm rooting for bulls. I hope they can do it because they've tried their best here. But be prepared, we could get another pullback here by bears. I think the scalping videos in the course is great. Is break even. I don't know if there's any keyword used for break even, but let me see. I don't think there is, but you never know. I'm looking at the course now, so give me a second. Okay, so start with 31A, B, C, D, which is swing trading and scalping. Ideal environment, swing trade means, which is great because Al explains when traders trapped, you know, how swing sets up and how one side goes against their stops and things like that. So it's actually pretty good. So there are 1, 2, 3, 4, 5, 31A to 31D. And then is, let's see, protective stops. Take a look at 33A. So this is all under how to trade prerequisites part or section. Is scaling in. scaling in is starting with 35A and 35B, C, and trade management 36A and B. You should definitely watch these, and you'll understand a lot. When you get trapped, how do you fix? It's all explained in there. And then I mean, it's basically every other video explains it, especially in the trading price action patterns, but you have to go through them. All right, so we failed to close above 50%, and one of the examples I showed that had a pullback, hopefully you guys paid attention, this could happen, but as long as we don't close below the close of 67, then we could go right back up again. Okay, so bulls got a chance here, and is bears who were selling also scaling in here, trying to break even. So failure to take the 67 close, bulls can now come in once again. They could be reloading right here. So remember that, right? Shotgun, right? So one more and then go. As long as we do not move underneath 0%, we're not going to come down here. We could just go right back up. This was an attempt to sell, maybe break even as close as possible to the close of 67. So now anybody, why is this happening? Because the bears exited out of the market. Now bulls are coming in. So as they exit out, the bull bar keeps going higher. This is where the bulls are trying to reach still. So this time they have to close this bull bar. Let's see if they can make it. What if the bar closes bearish? There's a chance always coming back down to the 67 because we're still under 50%. I want to buy, but I need to see bulls moving above 50%. I'm not interested in buying here. These stuck bears with 67 close and below, they sold the close of 72 and they're still trying. They could get another bear bar as far as I'm concerned and bring market down to here. And if they do bring market down here, they can easily bring market down to here. I don't want to buy into it. I want to wait for bulls to demolish these bears and squeeze them out of the market so we could get that leg up, maybe second leg up or the third leg up. So yeah. The resistance is here. Not only market wants to go up to where I have a arrow, they also want to go and test here. But I have not bought anything because this is a wedge pattern. It's a hidden pattern. Is up on this, down on this, up on this, down on this, up on this, right? There's a wedge bear flag here. So this can come, if I buy, it can go against me because these bears are still looking for a reason to sell. It's difficult. A bar like this is a trend bar. Will want continuation. This makes it difficult. Bulls still want to get back to safety here and then maybe test there, but I don't buy it just because we have these inside bars. I want to see a bull bar. I might entertain the buy. Then if I see another one, I would hold it in here, but this is where they can also sell. Right now, these retail traders who are stuck here sold because they got a signal bar. It's a bear close. They sold underneath 72. They sold a close 72, so they're trying to get as close as possible to the close of 67. But they don't have to stop there. This bar closes below 0%. We could easily come down here. We could easily come down here. That was the whole goal. Bulls kind of gotten exhausted. But so now I need to see how satisfied these bears are. If they're satisfied and they exit out early, bulls can still come in and we could still go back in here. Okay, first here, then here. Okay, so my job is to wait for that to set up. Otherwise, they can easily trap me and I could give back what I made today. Who wants that? Nobody. Nothing closed. You see how that's working out fine for bulls now? Nothing closed here. So now all we need is a bull bar going above 74 high, and then bulls will try to get above 50% probably. See, I didn't sell either, but look what happened. We came down a couple of ticks below the close of 67, so that's it. This is where bears are satisfied. If they're exiting, we now start to get bull bars. So that area I am pointing with the arrow is target. First to 66%. I'm sorry, first to 50%, then 66, then that area. But we need a bull close. We still haven't gotten above 50. I'm not buying this yet. I want to see a confirmation first. Anything's possible because it's the end of the day. 19 minutes left to the closing bell. I don't want to get myself trapped because this could be wedge, bear flag, lower high. I don't know. If the bulls fail here, once again, bears can take over. So I'm assuming they're not going to fail, and we're going to go up here, and then maybe even here. All right, so we reached, wow, nice. All right, so hopefully you guys bought this one. If you did buy, I'd be buying as it passes through the 50%, I would be buying with a market order. And then I would scalp here and then leave a runner into here. That's resistance. We might get rejected there, so watch out. However, what if we just go in here and start to close bull bars, then expect these highs to be tested? But because it's the end of the day, I wonder. So this is done. This is where we might stall a little bit, but if we buzz through it, this is where we're going to go. Is market could end up going here. Might even go to 166, only if we break above this bar. We're closing the gap, so this is good for the bulls. But resistance is resistance. You cannot discount it. We could still come down from here. Oh, okay. Well, I hate to say I was right, but I was right. You really needed to pay yourself. Resistance is resistance. Okay. If we break out, meaning we get another bull bar, I want to see bulls take out the 100%, which is the body of 67. Then yes, we can actually accelerate into here. There is plenty of time to close, and we could even make a new high today if we wanted to. We could even get to not just there, here, is maybe even here. It is possible, but we have to break this resistance first. So there's plenty of time for bulls to break out once again. We just need a follow-through bull bar. So we are now in the 60% probability of going back to and break even, full break even for those bulls stuck up here. This was the 80%, which we reached. Now we have the 60% probability. But this resistance needs to be broken, and we need to close bull bar above 100%. Otherwise, we could get a couple of bear bars and close the day. So we have about 10 minutes left to the closing bell. So it looks, I mean, we can really get there. 53.1575. 53.1575 is right around here. And then the 200%. Like, we can literally reach there if they get a breakout. That's with the institutions. That's with this bar right here and the next bar and the following bar. So bulls can actually get that breakout. So yeah. You see how we closed above 66%? That's when you give up on bears and you expect now a breakout. That is the first target, 133%. I'm basically taking 1/3 of this range and just projecting up. That's L's, how L divides ranges into 3 pieces. So I'm just projecting. It's not a special fib level. It's just simply L's 1/3 trading range level. It's not a magical number, but I've tested it over the years. It works great. But obviously we need a bull bar first. Breakouts. Let's see if we can get that. There's still 8 minutes. They're trying to take out the prior highs and make a new high. So really, anybody who bought is into the close of this gap, wanting to bring market up there. But you have 1, 2, 3 strong bear bars. Sell-off was strong. Rejection, so it's confusion. The market is trying to get there. Could be sellers there. I don't trade this hour. I do not trade this hour because anything's possible, and it's just too volatile for me. I have turned perfectly fine, great P&L into a red P&L, trying to trade these imbalance hour, market imbalance. It could be very dangerous. You don't want that. So it's just entertainment purposes at the moment for me. It's confusing because it was a big up, big down, sideways and up. I'd assume we're going to try to get there, but who knows? Not much time left. Be better if they can accelerate and get to this midpoint on the daily. It's an inside day today. Tomorrow I will be on again, but it probably won't be a full day because event is over. So I will be done noon. And then Thursday, Al Brooks is coming in the morning. I will be in around noon, and then I'll close the session. Brad Wolf will have a full day on Friday, so don't miss that. I'm sure he'll turn it into a training session because he's on entire day. So bring on your questions. Oh, there are some questions here. I missed it. Sorry. I'm looking at the Discord. Any comments, thoughts on this wedge? That's not a wedge. That's a trading range. So that's basically testing all the trading range highs. But so yeah, I mean, we can. I don't know. Let me see. I think the market will probably wants to test the trading range highs and then see if it can get a breakout. We're making higher lows on that chart, precog. So market is trying to squeeze out the bears. We get a breakout. Don't expect it to be strong. Expect a pullback to the moving average and then look for a bear trap under or at the EMA. Then you look for a breakout. 78, 79. If bulls can take over right here, right now, they need to break that 100%. But this resistance is still holding. We're right above the mid-channel line, so this is still a bull swing, and they can still reach at the minimum 133 or 166, but if they accelerate somehow, we can even get up to here, 200%. So, I mean, this game is not over yet, right? There's still more than decent 15 minutes of price action until the 415, 410, 415. And then it goes into more machine trading all the way to 5 p.m. You don't want to be stuck in that one. But it's trying to break out. It's trying to break out, trying to go up and test the prior high, which is 64 high. There's a measured move target. We're never going to get there today. That's for sure. I'm more interested in here, this line, 1575, which is here, closer to the 200%. But it's not accelerating, and this is already bar 78. So it's either now or never. Okay, so now it's getting a little, look at that. You see how institutions entered? 78. Normally it used to be 77, but there is no halt anymore. There used to be halt, and we used to get these insane bar movements with bar 77. But now it's moved into 78, 79 because there's no halt. So it's just continuous price action until the close. So we generally now get these big moves with 78, 79, 80. Yeah. We did not break that 100%. That resistance is still holding. But I think bulls are going to try to break this. I don't trade this. I like to stick to my price action trading. I don't care if it's institutional hour. Resistance and support is any institutional bar will respect it. So this is important right here. You got a leg 1, pull back, leg 2, pull back, leg 3, right? You got an inside bar, you got another inside bar. Bears are trying to get a strong bear bar close so they can actually sell because it's a gap here. So basically they see this as a supply zone, okay, not just a resistance. And I see, if I'm marking it red, 90% of the time I'm expecting some kind of a rejection there until they can't sell. They try. Look, this was the first sell, failed, second sell right here. I do not trade this hour. It's very dangerous. I had my fair share. There are times I will trade, but this I traded yesterday. Friday I also, hold on, that's today. Yesterday was right here. Friday, I traded that. Obviously, everybody else did. But, and then let's take a look at here. Look at this one. All right, so this is not tradable. Look at this one. Tight trading range is at the end of the day, 76 close. That's your sell signal. Second entry short 75. First entry under 72, 75, sell. But then you get this, institutional bars, right? But they close it bearish anyway. That I'm going to apply the price action. Leg 1, pull back, leg 2. I don't care what institutions do. They just accelerate the move, that's all. Right? So here, look at this, 76, close of 76, 77. Bulls bought it. You're going to have to take profit at the prior highs. Price action is price action. Doesn't matter. You got a leg 1, pull back, leg 2, pull back, leg 3. You're buying into that trading range highs. You have to take profit. 79, institutional bar. They're only going to speed up things. That's a sell signal bar. Exit underneath if you are still long. So what's so different today? That's still resistance until it's broken. If they break it and close a bull bar, then yes, they will accelerate into 133. maybe last minute shenanigans and we go up to here. But remember I said around bar 77, it's not accelerating. I don't see fast price action. You know, we could just close one or two more bear bars down here today. Anyway, let me open the question box. So I'll just take a few questions there. And then I'll take a look at today's bar by bar analysis, and then I'll end the day because I'm super tired. Okay. Tomorrow, we have what can happen. Well, bulls bought, bears sold, and then bulls showed up, back down, right? If this is trap, this is where I want it to be tested. Tomorrow, we could go and test here. And then if we continue to go up, this is where I want market to test. This is where sellers are waiting. We could actually go up tomorrow and then come back down, right? Today's an inside day. But the problem here is now when this bar closes bullish, this bar closes an inside day, because this outside-inside combo reached 2 breakout targets, you now have a brand new mother bar on the daily. So it's new rules. We're stuck inside this bar's range. So that's going to be for tomorrow, right? Today closes as an inside. So it's, what do you got here? You got an inside bar, right? Some bulls will want to buy above it with the stop under. So tomorrow might need to come in, test around here, have a wick, and then go back up. We get a bull bar like that, we could test right there, we could test right there. Tomorrow could be maybe start around here or start around here, come down a little bit, and then go up. So we could test these levels and then come down the following day. We'll see. But hopefully it stays like this. Then we know market is going to want to test this high. Trap zone, upper level. We're going to get a rejection there first, but we might continue to go up and test that. So, and then for more bullish price action, I want that. And that's kind of the all-time highs. And we could get there. But yeah. So tomorrow we have a new mother bar. Yeah, I think we all measure somehow, right? Some of us measure differently. We all look for 1 hours and 2 hours. So, I mean, I think the way that I'm explaining, so if you're looking for, so the question is, when will your measurements have better odds, or in other words, have edge? That edge. You don't see an edge here, so you have, bulls have better edge here, or better odds, when I said if we start to close bull bars above 50 and 66%, right? So we're definitely going to go and test these highs. We ran out of time. Market could still go up here. So obviously I'm saying, look, and I said if we don't close a bear bar here, bears lose their chance to sell, and the bulls get a better, odds for them, and you just go long, basically, right? So look what happened with this bar. It came down and test, failed. You could even put a buy stop order right there and look at backdoor and just go in with this bar. I did buy and took profit there, and I'm done. I'm not going to hold this because it was the institutional hour with the close of 76. So right there, I did the odds, okay, and the odds were favoring bulls right there with bar 74 failing to close right there. So I talked about all of this, and I'm showing that with the measurement. How you interpret, it's up to you. You just have to listen, I guess. Here, let's talk about, I'm going to get rid of this channel. It's in the way, but you understand that this broad bull channel is, I kept looking for buyers. I had another chart on another monitor, and I had this. I don't like to put too many things, graphical elements, on the RTA charts, but I kept looking for this, and I wanted to keep buying, you know, at the low. So you have a good swing set up there from the upper third. So this is the upper third or the up quarter. Okay, this is a trap zone. There's sellers are there. Once we move below the trend line, you know, you could just sell and target these lows. But it became more clear here that we're definitely going to try to get back into this upper range. So let's get rid of this just to keep it clean. All right. All right, so the market started with a small. It started right at the EMA with bar 1. It didn't really have any gap up or gap down. It started right at the EMA, but it was a gap down from the yesterday's close. So to me, that's still a bear spike down. So I'm thinking, is this a bear flag? Are we going to be selling and coming down here? Probably not, because we have this tight trading range here. We have this tight trading range right there, and we're going to go sideways for a while. So now you have a bar 1 is bear bar. Then you get the bar 2, and we talked about this. I said, as long as we get 2 bar trading range, I'm going to look for the bar 1 highs to be tested and probably sellers waiting there. So I talked about if bar 2 closes bullish, I'm going to buy above it. I'm going to target, but I have to scalp. So you can go for 1R, 2R. You got an inside bar there. So I'd measure that, and maybe you can put the stop here, bar 1 low. Here's your, or you can say, no, I'm going to measure from the actual risk, right? So, I'm sorry, the initial, and you have 2R right there. If you bought above 3 or the close of 3, you get your 2R, you know, either or. So I use that, but really I was targeting 79 low. And I said maybe we can get to the close of yesterday's, but that wasn't in the cards, so we came down. When you get a rejection bar like this, that's a failed breakout, right? So it's not good. Or you can say, hey, did we get a 1R there, or measured move? We failed. Once I see a measured move fails like that, that's because that's upper wick getting no follow through. There is a wedge top, and we're going to reverse right back down to here. Bears are stuck here. I talked about if anybody sold untimely the close of bar 1, they're going to sell higher, and they're going to try to get market come down. So this is basically a expanding triangle with apex right there, right? So I'm basing my trade. Are we above it? Are we below it? Can I sell the pullback? Can I buy the pullback? So it was a mess. So it's a trading range, but it's expanding up and down. It was tough this morning. I mean, I scalped this, but I had to wait for 7 o'clock, the news. News trapped everyone. I sold this bar, right? Because technically it's the second entry short. But now I'm wondering, are we really going to go below bar 1? Because even if we do, there's a tight trading range here. I don't think we're going to go too far. Buyers are here, and they could show up. So I'm in a scalp mode. This is a trading range. It's rather tight, and I have no other option but to scalp. And if I scalp but hold a runner, now bar 10 makes it very difficult. I'm going to have to either exit with the close of bar 10, or sell at the high of bar 10, or sell at the upper third or the open of bar 8, and then try to break even. So imagine you sold here, you're stuck down here, you sell again, okay, maybe at the high of bar 8 or the open of bar 8, wherever you put your limit order, market will give you a break even or safety price, minimize your losses with bar 14, right? But then it's a bull close. So it's from the highs, you got high 1, you got high 2. The problem here is that bull flags are not breaking out, bear flags are not breaking down. You're stuck in a trading range. So I said to everyone, well, we're getting a lot of reversals. 5 or more reversals, eventually it will have a swing trade set up. So I started to count the reversals. Here is we came down and we reversed. Came down and we reversed. So 1, 2, 3, 4, 5, right? So we have 5 or more reversals. It tried to get a swing. That's a two-legged move. It's with the bar 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So normally I expect about an hour of selling, right? Minimum 12 bars if I'm looking for a swing. Generally average between the 12 and 16 bars. Bigger swing is about 20 to 24 bars, okay? So, and anytime I start a swing and it only lasts about 5, 6 bars, I am done. That's not a swing, that's about to trap me. This one lasted about an hour, okay? But look how it ended up. So you have, this time I'm looking at this. I have a breakout failure for bulls, double top. I have a breakdown failure, which is a double bottom. Failure over failure is a swing. But in order for this to become a good, healthy swing with 12 to 16 bars average, I need 2 consecutive bull bars to buy above the second bar with a stop order and put my stop underneath the first bull bar. I got none. I got a bull bar. I got excited. Oh, no more excitement. That's a bear bar, bull bar. Nothing's happening. I can't buy this, put my stop and buy here. I'm buying too high at the top of a trading range when everybody else is taking profit and exiting out. But even if you put a stop order there, you're safe. The idea is to buy with the stop orders, not with buy to close or with limit orders. That's how you enter. The location is bad, so therefore I'm not going to buy. Then I get a break okay, now look at this. There's more. I've got a, double top here, maybe another double top here, right? And I've got 2 bars. Okay, I like this. So now I am measuring. I got my criteria met. 2 bars. I'm going to put my stop above the first bear bar. You don't have to. You can simply use bar 15, but who cares? I'm going to stick to the rules. So I'm looking for a 1R. My 1R is right there. Okay, great. I take profit there, right, with bar 25. Now I'm extending because I want 2R. Extension is half R. So I measured that and I look to see how healthy this bear trend. Is it any healthy? I don't know. Are we closing below the half R? No, but look, and then in the meantime, and I'm counting legs. Leg 1, leg 2, leg 3. Still no bear bars closing. I don't think I'm getting this 2R. It's not going to happen. It's not in the cards. But look here. That's because there was a breakout, pullback, bull flag, small pullback, bull trend. That's because this area is support. We're not able to break that support. So there are buyers. So instead I start to look for buyers and I gave up on these bears, right? I scalped as much as I can and that was 1.5. So now I have high 1, high 2. Oh, that's beautiful, bar 35. It's time to enter. You can buy, right? Say you bought right there, put your stop there, right? That's 1R, that's 2R. They even got 2.5 right there. Then it pulls back. It's a very decent pullback, but I said we're not moving underneath the EMA, right? I mean, at that time, I think I was I said it when it was here, and I said, look, I'm going to take a break. I'm going to go get lunch. I said, if we don't move underneath the EMA, we can go higher, right? But if we move underneath the EMA, look for this area to be tested, but the buyers are here. So I came back from lunch. I saw nothing's happening. It is beautiful 2 legs down, failed at the EMA, trapped under the EMA, beautiful bar 45, right? They're going to test probably this high, try to make a new high, but it's trading range. So look for good buy signal bars. It's a decent bar. You can buy above it. Much better bar. If you bought above it, you're buying a little bit high, but chances are it's going to go up. So if you buy here, your stop is here. You should be looking for, you put your stop there, that's your 1R. I don't think we did 2R there, but let's see, 1.5. I'm more interested in 1.5. Yeah, we got the 1.5, and then that's it. So it seems to be we're getting 1.5. Ali Afshari talks about 1.5. Sometimes you don't get 2Rs very clearly, depending on how you're measuring, right? But anyway, so that was bulls buying, bull flag is another flag. And this time I said, this is a swing setup. We are going to buy, and we did. But the only problem here is that, unfortunately, we could not get above. Here you can also measure this rejection, right there. That was 1R. We couldn't get to 2R. Again, 1.5. We could not go above it. And trying to see what else I measured there. Really, I was looking to see if we could get above this high with a bull body. We never did. And that's, I did take profit, but my profit was from here. So you had up on this down. This was my projected targets, and we could not get above it. Took profit, came back down, went back again, tried to break above, failed. You got a second entry. Remember, I talked about that second entry, 65. Bears were already piling up underneath this bull bar, and then 65. Entered them into the trade, and then it started to accelerate. I sold this bar. Okay, even though it was support here, I said, I'm going to sell this one contract just to see if it's going to break it. Because if it doesn't and it bounces, I can sell again somewhere here. As it comes down, I can exit out and go long. So I always enter with one contract just to test the waters. If it starts to accelerate like this, this is where I was like hitting the sell market, sell market, sell market. I think I built like 8 contracts here total. I think I might have like another 7, maybe 8, 9. I was just keep pushing the sell button as this was coming down. And I said, this is great. We're closing these gaps. So I'm going to target this side. I'm going to target this bear body, and I'm going to take profits. And that was it. So I took profit there. And then I told everyone you could also measure from here, 2 bars. I think I measured from here. That was the 2R. I took profit. I was done. Then I told everybody this is going to bounce, and we found the sell 50%. They did try to sell, but they could not breach the close of 67. They did, but only with the wick, and that was a break-even event. And then they closed the bar. Very weak bearish. That means bulls are coming in. You can put a buy stop order above it, and then they fill you in. So I showed you guys a few examples there. All in all, if you just counted wedges, right? So here is wedge, overshoot, undershoot, double top, lower high. You can sell even underneath 16. You don't have to wait for a second bar 17. This time you're counting for wedge bottom. You got a leg 1, pull back leg 2, pull back leg 3 from 20s, 25, 31 is you got a wedge. And then a reversal back up. We're going to go test these highs. If we break it, look for a pullback and buy above a bull bar. So you could have bought above 38. So what am I looking for? I'm looking for 2-3 legs up. So I'm counting for bulls now. I can count from here, maybe 1, 2, and 3, right? And then I'm going to look for, if this is coming down with a strong bear bar, now I'm looking for a second leg. This is strong enough to get a second leg. I'm basing my second leg to extend into 37 lows. That's about it. Or you can, if it's a bull bar, okay, look, if the third leg starts with a bull bar, I don't wait for market to come down, bears to come down and test the low of that bull bar. I look for a bear bar and its lows, and that's bar 37. I'm going to take profit there, and I'm not going to linger in because it's going to reverse back up super quick. So it did. Now you have down on this, up on this, down on this, up on this, down on this. There's even a micro wedge there. So now bulls take over. 45 is a decent bar. It's probably going to get a leg or two. So here's a leg, pull back. Second leg is prior highs. But why did we get 49, right? So let's talk about that. Look left. There's only 2 bars here. There's only 2 bars here, right? So this is not a good, strong sell zone. Selling will be weak, and we will threaten the 23rd, bar 23 highs again. So we're going to challenge it. You only have 2 bars, and then you have alternating bear bar, bull bar, bear bar. So selling is not strong. When the market reverses, it's going to try to get above the 23. It's also not good sell signal bar. I did say that we're going to go back and test the 23, but there's 3 bars selling here, and then continuation even more, 2 more legs. So this, the strong sell zone is actually bar 15. So we test bar 15 range. That is not a good sell signal bar. So we're going to go back and retest bar 40, but that is a good sell signal bar. Okay, so you sold it, right? That's decent. Then this happens. What do you do? Uh-oh. Well, you sell again until you break even. It's going to give you a break even, and you're going to exit, especially bar close. Remember, we did that. I said if anybody's stuck underneath 49, something's reasonable, sell in there or sell the open of that bar. You're going to get a break even, but you have to be quick about it, right? So you sold here underneath 49. You sell again. Market gives you a break even, exit, especially if a bear bar not reaching either the close or the low of the 49, and it closes on its side. That's right there. Bar 54 is hinting you that you are done. If you're holding and hoping that this is going to come down, you're going to be giving back whatever is in your P&L. This is it. This bar is basically telling you we are squeezing bears out of the market. Something big is coming. That means this buy zone is no more valid. Then you get this bar 55, start buying while it's still closer to the EMA. And then you get 57, put a buy stop order. You get this, hello, put one here. Now you get a really good bar. Then you get this. That's where I start to say, well, this is actually a double top. I don't like this. There's a lot of profit taken here. I'm taking profit. It happens to be this projected target line anyway. So is because bears started to trail their sell stops. They haven't really entered underneath 61 because 62 did not go one tick under. So those bears are still looking for a backdoor to enter. Generally, that comes in with the second entry short, and they're going to swing. So that's what we got there. And then I took profit here. I didn't do anything here. I didn't buy this. I didn't sell it. Then this happened. Okay, I bought it, but I took profit at the resistance, and that was it. Okay. Where did my question box go? Here we go. Is there any questions? If there is no questions, I'll take a look at the Discord, and I'll end the session, and I'll see you guys tomorrow morning. I think I answered most of the questions during the. Okay, so Precog is asking, so mother bar is a bar that is followed by an inside bar. Yes. but it's an inside buy to the right, not to the left. Okay, it's to the right. So if you have the course, watch the bonus videos 15 and 16. It'll make all sorts of sense. Okay. But there's no mention of mother bar. It's something I developed way before I knew anything about Brooks' price action course. I was already trading with that. And it's just a tactical version of giving me let me demonstrate it real quickly so you know what I mean. For example, if there's bar 1 was a mother bar right off the gate, right? So it's an outside bar followed by hold on. Oh, I'm not going to do that right now. So here we go. So I measure it, only the range. I'm going to apply these range. These levels are not necessarily fib levels, the levels that I have tested a long time ago. So you have, so just to make it a little bit more visually appealing. Okay, here we go. So this is the mother bar's range, right? So what I'm looking for here is that back and forth trading. Here's an inside bar. It's a bull close. It's great. Most likely, bull's trying to get a breakout. But it's never a true breakout until we break this bar's, outside bar's, high or low. Without a body breakout, not the wick, this is a false breakout. Without any body breakout, meaning body closing. If it fails to close a body, that means we can actually trap the bulls and bring it right down here. So I have a trap zone is lower third, starting lower third, all the way to the outside. This right here is buyers waiting. For sellers, it's from there to there. Okay, so that's what I'm looking for. So but within the zone, I also identified one specific area at the low and one specific area at the high, which these red lines. This right here, limit sellers are waiting. They put a limit order, they sell. They put a limit order, they buy. They sell from there, they buy from there, until they reach and test this bar's high or low. So here we go. It's a bull bar, right? It tested here, found buyers, went up and closed underneath the red zone. So another bull close, but first it comes down here, right? Fills, gets all of those buy orders activated and closes higher. But still it's not closing above those red lines, 2 red lines, to tell me, signal me that it wants a breakout. It's not showing me that yet. So all I know is that these bulls are not all that strong at all. Finally, we get a bar closed above that red line. Now I can say that if I go long, I have a scalp, probably from the high to that line, which is the top of this trap zone. Sellers are waiting. In fact, this bar went there, right, and then closed lower. Then you get the bear bar. So now we have a bear body closed inside the limit area. We have trapped the bulls. So what do you think is going to happen? They're going to sell within the range, come back and test here. Any buy orders over there, right? So the market opened here, right, with the close of the bar 5. Here is bar 6, open at the close of the bar 5, right? So came down first, tagged the buy zone. If you had limit orders there, it went up and closed right there. So okay, it wouldn't even go there and then came back down. So it's still not clear. But the one thing that I'm seeing now, I'm getting bull bars, right? And we're above the midpoint of this outside bar. Anytime we're above the midpoint of outside bar and I see buyers are buying with limit orders and we're closing bull bars, I know that we're going to breach the high of this bar. My first shallow target is there, actual breakout target, and a measured move target of the range of the outside bar. Now you tell me, look what happened there. I'm not really snapping these to the highs and the lows, but that's and that's that. So we came very close. So that is 98. That's 98.25. There's a 1 tick failure, but look what happened. When a 1 tick failure happens like this is where I take 1 or 2 tick below these levels, especially this level. This level I only use like 1 tick, but this level I try to get out as early as I can because I know it could fail. Why did it fail? Because this bar was not actually a breakout bar. It was an instant breakout bar. It's an all-in breakout bar and tag the targets bar all in one. You want to see a breakout bar and a pullback and then go. Then you would get full targets, okay, tagged. When you get this instant breakout and it's accelerating, sometimes you miss. So that's why you have to take profit if you do that. But generally, I miss my point. I may not be in this bar. In fact, I always wait for the breakout. But now we got the breakout. Okay, so I have a sign, I have a signal bar saying to me, hey, I have a breakout body. That's good. But problem is, I already reached targets. So now I'm looking for a pullback to the breakout point. I'm not getting a bull bar closing. This one's coming down and closed all the way down here. I cannot buy this. I'm going to have to now let bears come down into the lows, the trap zone, see if they can actually break a bear body. If they do that, okay, then I'm looking for a quick pullback and sell into these targets. I didn't get that bear body. Okay. We still don't have a bear breakout. As far as I'm concerned, this can actually trap the bears and we could go right back up again. I'm still using this. Is there any other? Okay. So this bar reached the targets. So basically, after this bar, is there another outside inside combo here? I'm looking. Yes, there's this one. So now I can use this one. So now is my measurement and my trading, my limit order trading is based upon this bar. Okay, it's an outside bar followed by an inside bar. Now look what happened is we have a false breakout. I'm never going to buy that. There's nothing there says I should buy it. None of this is my concern. But what I can do is that inside bar is bullish and there were buyers. I can lace this area with buy orders, wait for market to come in and fill me, and I actually get the scalp inside this bar, outside bar's range, until I get a breakout. All right, market closed above the red line with bar 14. That's a good sign. That means we're going to probably try to break out again from above bar 11. My job is to wait for that trigger bar or signal bar. Bar 15 is that bar, telling me that it is a breakout bar, which is great. But I can do two things. I can put a buy stop order above it and wait for to get filled and go for breakout targets. Or I can look for, since this is a trading range and limit order market, I can look for a pullback and see if we can get another bull bar, then I can buy. This one, again, breached that breakout level, moved underneath 15, so it's going to the mid-level. Many bulls who were long above here, both too early, will buy at the midpoint and they will try to break even with bar 17. That's what's happening. This is why I don't like to trade inside the range. Inside the range goes up and down, several times, traps before it gets a solid breakout. So now we have two bars. None of them close below the mid-level, but we now have this bar. Bar 18 not only closed below the mid-level, it also has a breakout. Now I can sell this, but where am I going to sell? I'm going to sell at the breakout level. I'm going to put a sell order here, and then I'm going to put a sell order here. So probably I'm going to get filled with both. Now I have a scalp, right? So one thing that's not happening, right? My stop could be up here. My stop could be up here. What's not happening is that I'm not getting my target. That's test. So I'm getting upset about it. So what am I going to do? I'm not going to be upset. That's fine. I already entered. My stop is as early as I can put it above the bar that I sold. What I'm going to do, I'm going to sell again. If it goes right back to the midpoint, I'm going to put a limit order sell. It's going to activate me. It's going to come back to where I sold. There I sold. I'm now making money. My target is, again, this line, that line, right? Why? Look, let me add the levels so you know. All right, so I sold 50%. Full pullback, right? If the bears had a breakout, but it goes against you, that is a good place to put a limit order to sell. And then, or you can sell underneath 23. It doesn't matter. You're looking for a rejection bar. You want to enter and you want to fix it. So this bar now is again, another breakout bar. That's great. Now I'm selling. My target is minus 23%, minus 61.80, and minus 100. I have to take profit. I generally take profit if it's 100, 2 ticks above. If it's minus 61, 1 tick above. We generally get this very quickly. You don't have to do the front running there. But these levels, I'm going to take 1 tick above just to get filled before everybody else. It moves back up and then closes another bear bar, so it's still going, but nothing's closing below 100, minus 100. And then we get this bar. So is there another outside inside? Yes, 31, 32. So now you can measure 31 and get the breakout targets. Well, look at that one. This one actually went 1R, 2R, kind of 2.5, and then came down. So and so. And then you got another mother bar, outside, inside, right? Now you can measure this one. Look, failed breakout. We are going to trap the bears. I can buy with a limit order as early and then stop underneath this bar 44. And I can target the high of the outside bar or the first target, 123. I got the 123, comes back down to the 50%. The disappointed bulls bought about this bull bar, but couldn't get to the target, second breakout target, will buy there, right? And then they're going to try to break even where they entered. This bar gave you that break even, which was above 48 high. And now they're making their targets. Check that out. Hello. This one was just smoking. Look at that. That is, this one is 1R, 2R, 3R. So we got a 3R from this mother bar 41. Go test it out. You're going to love it. It's, but first watch the videos in Brooks Price Action, bonus videos, 15 and 16, and then apply these levels and this logic. Okay, you're going to do great. But you have to get used to how these traps are taking place. And then you'd be like, oh my gosh, I can enter so early with a tiny little risk and take profit here and see if I can buy the pullback and look for a breakout and then run. It's going to change the way you trade, I think. But anyway, you be the judge. All right, you all have a great day. I'll see you guys tomorrow morning. Bye, everybody.